This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, out, in for Lisa Mateo. It fits with the market gloom.
Yes.
To have John Tucker with us. Just a perfect day to have John Tucker with us. Welcome to OMG Central, folks. Paul and I have been up most of the night with our team giving you conversation today on your 201k. On what's happened to Mag 7. Look at the chart of Mag 7.
Yep.
Mag 7, if you take out the Musk company, is a different chart.
It is. It is. So, I mean, again,
Tesla with a bounce today.
Yeah, you're seeing some. I was looking at the Citi Equity Trading Solutions note from yesterday, just kind of saying some of the groups that have been leading this market, like tech, like some of the communication services, those are the ones that are leading it down. Not surprising. So we've got the NASDAQ off about 12.5% from its peak.
Well, a lot of good conversation. We'll get to Gina Martin Adams in a moment. Just on Tesla.
Yep.
And folks, this is how fast the markets are moving. When I walked in the door here, and frankly, Paul and I were in earlier today, and then you slept under your desk, right?
Sure, yeah.
Yeah, I was on a
like
park
that.
bench out in Central Park. Tesla was 222, up $10-ish to 232. It's given half that back in the last hour. We're now up $3, 225. So that gives you a sense of the fragility of this recovery with futures up 13. We welcome all of you this morning on your commute across the nation. Of course, extra data checks. We'll look at the correlations across equities, bonds, currencies, and commodities, and really good conversation. For those of you like what do I do? Barry Ritholtz will join us here later on, and I've got it here. I told him I'd flog it every 5 minutes. How not to invest, which is timely to say the least. Good morning on YouTube this morning. From the Interactive Broker Studios, the Bloomberg Business Flash, John Tucker.
All right, well, it's green. I wouldn't call it a huge bounce. Dow futures right now up 98 points, a rise of 0.2%. S&P E-mini futures, they're up just about 15 right now. And the NASDAQ futures up 62. Most active Tesla shares after yesterday's 15% sell-off. This morning, they're up 1.8% pre-market. NVIDIA shares, they're up about 0.2. Airline stocks under pressure, down close to 10% this morning. Delta cutting its profit expectations for the first quarter. They're blaming, among other things, weakening travel demand. Data this morning, small business optimism falling to a 4-month low. 7 of the 10 components that make up the NFIB's overall index, they weakened, led by the steepest slide in the economic outlook since March of 2022. Later this morning, JOLTS Jobs Survey. Mike McKee says don't worry about these numbers today too much. It has been a hallmark of the carrier since its founding more than 5 decades ago. Southwest ending its free bag policy. They're going to begin charging customers for some checked luggage. Customers will be charged for their first and second checked bags. And L'Oreal recalling all of its acne treatment F-Color Duo in the U.S., and that is because of concerns that some of the creams are contaminated with benzene. Oh, by the way, for what it's worth, Canada, which sends the majority of its exports to the U.S., joining the list of global equity markets delivering better returns than the U.S. this year. Canada's benchmark receiving a lift from shares of copper and gold miners. And we check the markets view all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Paul, American Airlines,
Yep.
This is like the Delta you just mentioned. Center tendency, 30 cents loss becomes a guesstimate here of a 70 cents loss.
Yeah, so, I mean, the airlines are presenting at a J.P. Morgan investor conference today, so that's why they're all pre-announcing before they get up on stage, so they're kind of coming clean here. But, again, some weakness in the airlines. And, again, just a couple of months ago, in their earnings calls, they were talking about strong demand in 25. So things have changed here in terms of the economic outlook?
Always, when I have a beverage of my choice in my hand, I say we need Gina Martin Adams to lead off the show. That's what happened yesterday. Gina, I was sitting there with a cocktail picking up the debris of the market close, and you were the first name I came up with. Within the securities analysis of Bloomberg Intelligence, is now the time where you mark earnings down, like we just saw with American, like we saw with Delta, like we see Goldman Sachs go to 1.7% real GDP. Are you marking down the earnings view?
Yes, analysts at large have been marking down their earnings view for several months now, as a matter of fact, as very clearly by the end of last year, they got a bit ahead of their skis. Companies are a little bit less so. What was really interesting about the December-January period is analyst optimism far exceeded even company optimism, at least until the transcripts came out. We found out in the transcripts companies also were very optimistic, but yet they weren't as optimistic as analysts were hoping for, and certainly not as optimistic as the market was priced. And this is, I think, one of the interesting things about markets. At any given time, what's priced in the equity market is not necessarily what companies are telling us we should expect for earnings, nor what analysts are anticipating for earnings. And at the end of the year, what was priced in the equity market was extremely optimistic expectations. Our models told us that the market was priced for greater than 20% earnings growth to emerge this year. So en masse, we're now seeing a little bit of rationalization in those earnings expectations. Companies are taking down estimates. Analysts are taking down estimates. Most importantly, the market itself is taking down estimates to more realistic expectations for 2025. That can be a painful process, as we've noted over the last several weeks.
Gina, to the extent that this market, again, the S&P is probably off about 8.5% from its peak, the NASDAQ off about 12.5% from its recent peak. Are these simply a reflection of expectations of slower growth, or is it something more as it relates to the equity markets themselves, or is this the equity markets behaving rationally?
Yeah, I think a lot of it is rational. As much as it feels so painful, we have had 10% corrections in each of the last 2 years as well. So let's keep that in mind. We go through these periods of correction about every 9 months on average, but some of it is a little bit of fear. I think I would be remiss not to note that valuations have compressed materially for tech stocks. There was one big shift in tech, and that was suddenly U.S. tech is not the only game in town. We have to contend with competitive threats from China via DeepSeek, as well as Alibaba's announcements so far this year. That's changed the game somewhat for tech and increased the pressure there. But broadly, also this uncertainty with respect to tariffs and the austerity measures of the federal government. Certainly coming into this year, I think very few market participants expected to see federal government layoffs en masse, expected to see such extreme cuts at the federal level. That's created a great deal of uncertainty. At the same time, many market participants were modeling their expectations based upon the first Trump administration. And the sequencing of activity in the second Trump administration is entirely different than the first Trump administration. We don't have the tax reform yet. Market participants are hoping they might get that tax reform, but in the meantime, they've got to contend with tariffs, which have extreme downside risks for earnings in the short run.
So how do you play this? What are your conversations with your clients these days, Gina? Is it one of buying the dip, waiting for maybe a floor and a bounce? What are your conversations like?
We've talked a lot more about international equities this year. And this is going back all the way to November, when we got to a point where European equities were priced at all-time low levels relative to the rest of the world. We're looking at extreme discounts available in international equities, as risk has certainly concentrated all of its bets in the U.S. over the course of the last 2 years. So that rotation, I think, is one of the most important things over the course of this year. We think that the rotation into international equities is somewhat durable. You've also got brighter prospects for growth emerging in some of the economies where fiscal austerities reverse or fiscal spending is occurring, right? With Europe as well as China, you could have more fiscal spending emerge in 2025. That is an extreme contrast to the austerity measures in the United States. Broadly, if we see growth recover in the rest of the world as a lagged effect of U.S. recovery over the last 2 years, that should also benefit these equities, which are very discounted by comparison. So we've focused a lot on the non-domestic stories. as the area of potential upside, at least on relative basis for this year.
Gina Martin Adams with us at Bloomberg Intelligence. We started today. Terry Weissman has just walked into the studio. We'll get to him in a moment with Macquarie. Gina, the charm of you is your technical analysis ability folded into fundamental analysis as well. Are we seeing catharsis? Are we seeing the emotion where long-term money can come in and say, hey, with the blood on the street, this is what it works. This is where I can acquire. Are we seeing that?
We're not seeing it en masse, but we are seeing it in pockets. We did see momentum hit.
Terry Weissman wants to know a pocket.
Yeah.
Give me a pocket.
The pockets where we're seeing extreme pricing, small caps is one. Small caps are back in a bear market. We also saw momentum hit an extreme low. So for the momentum factor, or the highest momentum stocks in the market, did hit an extreme low in momentum themselves. That is usually a signal of some sort of at least near-term recovery emerging. It does not necessarily signal a longer-term recovery. And one thing that's holding the S&P 500 back certainly is valuations have barely repriced. I mean, we're still sitting at valuation levels because earnings expectations are plummeting. Valuation levels have only corrected about half as much, just over half as much as the market itself. So that's important to consider, as we're still overpriced in the U.S. at large.
Interesting.
That's the top line, though. And I think that's important also, is it's not all stocks that are overpriced. Some of the defensive stocks are still somewhat inexpensive. Healthcare still sits at the top of our sector rotation model. You have to have a great stomach for taking risk in the healthcare sector. But nonetheless, these are more defensive equities that should have a defendable earnings stream over the course of 2025. And that sector sat atop our scorecard at the end of 2024 and still sits there as of the first quarter.
And Gina, just looking at the technicals here, the S&P 500, the RSI, the relative strength, it's below its 200-day moving average. That gets your attention, doesn't it?
Yeah, all the technicals of the market are breaking down pretty rapidly.
Okay.
We saw the S&P obviously crash through its 200-day moving average. Unfortunately, we flew a little too close to the sun. We were a bit of Icarus there in the S&P 500 because the long-term uptrend line on the S&P 500 is all the way down at 5,000. So there's a lot of downside risk still in the technical picture now that we have seen some breakdowns. We are oversold. So in the short term, you would expect after that manic Monday that we had yesterday, some kind of turnaround Tuesday today, at least in the short run. But will that endure over the long term? A great deal of damage has been made in the technicals. And so it's a time to be constructive in pieces. But overall, the damage is still being played out in the index at large.
Gina Martin Adams, thank you so much for getting us started here this morning. A busy day for you at Bloomberg Intelligence. We really appreciate it. We welcome all of you on YouTube across the nation. As they say, on the Pacific Rim, good evening to you, with a special focus on India. Really been looking at our YouTube audience in India. Thank you for that later evening look, and particularly good morning in Melbourne. I'm supposed to pronounce it Melbourne.
Oh, really?
Yeah.
I don't know.
And Perth.
No.
And Sydney as well. Joining us from Macquarie here, of course, always out of New York, Terry Weissman this morning. Terry, Aaron Blake in the Washington Post has a devastating set of polls today that show Americans are not on board the tariff debate of the White House. How do you see this playing out to get us to some form of economic and market stability?
We have to get more clarity on what the U.S. administration's policy agenda is. And I think the reason that the Americans are dissatisfied with the current administration is they're not getting clarity. They're not getting clarity in a variety of ways. I don't think that President Trump has articulated very well why we need tariffs and what the aim of the tariffs is. I know that there's been a discussion around fairness, but of course, the U.S. already has tariffs on many countries. So you could make a case that the U.S. is not applying its own fairness to other countries, and I think this is where Americans see a certain degree of hypocrisy in the U.S. administration's agenda. So that's an issue. The other issue, of course, is that this is creating enough uncertainty at this point to get businesses to delay undertakings. It seems from the surveys that we've seen, but not just the business surveys, but the consumer surveys as well, that businesses have been dissatisfied with the level of policy uncertainty, and as a result, they are withholding from making employment decisions. They're withholding from making business investment decisions. And coming at a time when the household in the U.S. was already somewhat queasy about job security. Remember, even though the unemployment rate has been low, job security indicators have been poor. I think this is coming at an awful time. So from that respect, I think it's creating a certain amount of dissatisfaction with the administration and their policies. The way to correct this would be to get clarity, not just with regard to what the intent and what the meaning of these tariffs are, but also a more coherent approach to tariff policymaking. If that means staying with reciprocal tariffs and sticking to that as a theme, maybe that'll do the trick. But I think at this point there's been enough damage done that maybe we need really just moving away from tariffs, at least in interregnum, at least temporarily.
Just
and a
looking at
re-examination.
Exactly. I'm just looking at the Bloomberg dollar spot index, off almost 4% from its recent highs. Is there still more room on the downside, you think, for the U.S. dollar?
Yeah, there could be. And this is not really just because of policy uncertainty, of course. If it was just policy uncertainty that was causing this anomie, this uneasiness, you probably would see the dollar rally. In fact, the experience of the post-2010 period has been that when stock markets drop, the dollar rallies. What we've seen in the last 2 weeks is just the opposite. Stocks have dropped and the dollar's dropped. So to some extent, it speaks to something that's problematic with the U.S. Alternatively, and this is what I believe too, it speaks to something that might be good with the rest of the world. And when you look at the dollar's decline over the last 2 weeks, it's been concentrated against the euro, and that should tell you something right there, right? It's that this is not so much angst against the U.S. and the dollar as much as it is enthusiasm and championing what's happening in the EU. And that is an important reason for why the dollar has dropped.
Our conversations this morning around this market to pull back, futures up 17, the VIX still elevated 27.35 on the VIX. Terry Weissman with us, and it's just wonderful to have him here with his heritage at Bear Stearns, now with Macquarie of Australia, giving a global perspective. Terry, The Guardian in London writes up a Bloomberg conversation with Malcolm Turnbull, the Prime Minister of Australia. And I'm not going to go into all the details to save time, but basically he said China, U.S. can harm a lot of different people. To me, it's not a simplistic bilateral debate here. So what do you say to the White House about the Australias of the world who feel on the outside of the debate?
Well, one thing I would tell the White House is you certainly don't want to antagonize countries that are dependent on China for their economy, but allied with the United States politically and militarily. Because the worst that can happen, and I'm talking now over a 5 to 10 year horizon, is that, at least for the United States, the worst thing that can happen is that allies like Australia, who depend on China economically, grow closer to China as a result of alienation from the U.S. because of the uncertainty around the U.S.'s dedication to global security. Australia is dependent on China, certainly, but the good thing that's happening in Australia right now, at least vis-a-vis its relationship with China, is that China is being fiscally expansive. So any country right now that's dependent more on China than the U.S. could see an escape from the torture and of the policy uncertainty emanating from the U.S.
Paul, I'd mention here the Marine Rotational Force of Darwin, Australia, which is U.S. Marines stationed at Australian bases on that northeastern tip of Australia, closer to the South China Sea than anybody wants to admit.
Right, absolutely. So, Terry, we got the 10-year Treasury at 4.22%. Where do you think we end the year on that?
Yeah, well, look, it depends on whether we get out of this trap of policy uncertainty in the U.S. And if we did do that and we got some clarity, we could see growth resume again, maybe in the second half of this year. I think there's enough damage has been done, at least to the U.S., in regard to the delays of the undertakings by business to keep growth slow for the next 2 quarters. But that doesn't mean we can't have a rebound in the second half of the year. And maybe we end up ultimately with yields that are a little bit higher. But in the interim, I do think yields are going down. And I will tell you this as well. I don't think the administration minds that yields are going down. I think that's part of the plan. Remember, it'll be an important offset to the stock market decline, especially if consumers can refinance mortgages and get more money in their pockets as a result of this.
So where are we taking risk here, Terry? Where do you see an opportunity to take risk? Or because it just feels like everybody's looking to just kind of get on the sidelines, get safe, and see where this plays out.
At a 50,000-foot view, there's something to say about investing in China right now. The market's been generally, out of favor.
That's a Terry Weissman we know.
For the last 10 years or so. in part because of COVID, in part because of the sudden shifts in policy orientation, in part because of the property bubble. But to the extent that the Chinese are now undergoing a fiscal expansion, at least that seems like, I wouldn't call it an exciting play. Certainly looks safer than the U.S. Apart from that, I would look at niche plays in the U.S. Companies that are dedicated to finding solutions to everyday problems. That's what I like to invest in.
Is free cash flow help here? We had some people in yesterday just screaming, just buy free cash flow. And I see it in the tech stocks, the ones with free cash flow.
But that's another way of saying be defensive, right? That's another way of saying count on cash and dividends to bail you out of any situation that you might otherwise get yourself in trouble with.
This is great. Come back tomorrow. Terry Weiss with us from Macquarie.
My
particularly
pleasure.
The comments there in Australia. We say good morning, good evening rather, across the Pacific Rim this morning. Futures up 19, Dow futures up 116. There is a coordinated lift to the market, but I'm going to call it tepid. All in all, 27.29 on the VIX right now. American oil, $66.77. A lift. Gold, a lift, up $19, 29.18. And as Paul mentioned, the dollar weaker this morning. Euro dollar, I had a 109 print earlier, 109.00 on euro dollar. Right now, a 108 level. Of course, we're on YouTube. Subscribe to Bloomberg Podcast. It's building each and every day. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's sell-off, a bit of a bounce this morning in the futures. Dow futures right now up 113. The S&P E-minis up about 19 points right now. The NASDAQ futures up 74. Most active pre-market shares of Tesla after yesterday's 15% sell-off, up 1.6% pre-market. NVIDIA also among the most active. Right now it is lower to unchanged. Kohl's forecasting comparable sales for the full year of -4% to -6%, so that is worse than estimates. And of course, the airlines are highlighting a different environment. Delta slashing its profit forecast, citing weakening travel demand. American Air cutting its first quarter forecast as well. Overall, here's the scorecard. The NASDAQ 100 now down 12.4% from its high. That's a correction. S&P 500 flirting with correction after yesterday. The Russell 2000, the small caps, down 17% from its high. And Mohammed El-Arian, Bloomberg columnist, Allianz economic advisor, telling us this morning, he was talking to Nathan Hager earlier, that there's going to be a massive round of revisions to growth forecasts in the U.S. We're going to get close to the notion of stall speed, he says. He also sees a whiff of stagflation in the United States. Very interesting.
I like that phrase, stall speed. Really
stall speed is, well, economic growth forecast lowered to 1.5% to 2%. He says stall speed is somewhere around 1%?
Yeah, Goldman Sachs was at 1.7%. And what percentage, the way I look at that, John, is what percentage of America is feeling in recession at stall speed?
And we did get the NFIB Small Business Sentiment Index falling this morning. Most of the components that make up that index were lower.
Is all this self-inflicted? Is all this self-inflicted
what,
in the
John
past 2 months?
Self-inflicted?
I mean, I'm looking at the Kohl's numbers. I'm looking at the airlines numbers. 2 months ago, things were ripping.
Paul, you're getting me in trouble. Sweeney's getting us in trouble, John.
What road is he going down?
This is going to be our last day.
I mean, even our Duke basketball
here
chat
we go.
room yesterday just totally devolved into what's changed in the last 2 months.
Okay, well,
we can't even talk about Cooper Flag
to
anymore.
remind everyone here, our goal, thank you, Matt Winkler and John Micklethwaite, is not to have an opinion other than on March Madness and Duke.
Exactly.
And we're just trying to keep it going here, folks, with futures up 20. John Tucker, thank you so much. So I saw this research, and they said Troy Ludka, lacrosse at Bard, he's qualified. He joins us now, senior economist at SMBC on a brilliant piece on what the fancy people are doing. And you have a chart on vacation planning. I call it the John Tucker chart.
Yep.
Are we finally taking vacations like John Tucker, like never?
Well, I'm afraid it seems like the upper end consumer is slowing down. These are asset price sensitive consumers.
Yep.
So I think it's more than coincidence that this is happening at the same time that the stock market is looking dodgy at best.
Yep.
So people are looking at their 401ks, looking at their brokerage accounts. They're seeing that the number is no longer going up, but it's actually coming down. And they're saying, hey, maybe that vacation to the south of France isn't such a good idea.
So what is the underlying economic outlook that you guys have at your shop here? Is it changing? Are you changing your outlook for economic growth in 2025?
Ultimately, we think we're going to end the year at about 3.1%. We think it's going to be a strong year. We think the majority of that growth is going to be backloaded once the policy uncertainty clears. These tax cuts will help, not only for corporations, but also eliminating taxes on tips, Social Security, overtime, and allowing for the full expensing of auto loans as well. We think that'll be a huge shot in the arm to the lower end consumer who's been stressed for the last couple of years because of this inflation.
We asked different people this. Let's get a view from you. What percentage of American consumer oomph is from the upper quartile or even the upper two deciles?
Well, the top 10%, which these are people making about $250,000 a year, they now account for 50% of all consumption, which is not only unsustainable, but this is unheard of in American history. Just 20 years ago, they accounted for about 33% of consumption.
Do you see that adjusting, as to Paul's point? Do you see them adjusting right now? Are we really seeing like we're in March now, deep into March.
Yep.
Is there a February, March adjustment in that 50%?
It certainly seems that way. If you look at the luxury goods sector, there's a slowdown there, not only for American luxury goods, but it seems global as well.
So what is the concern about inflation? How do you think about inflation? Is that something that I know a lot of folks are saying, in a world with higher tariffs, that is one of the risks here? Do you see that coming into the economy?
Well, as it pertains to tariffs, we think it's more of a moving forward of inflation than anything. It's more of a one-off upward level adjustment. But one thing I would pose to you is, suppose you're in the market for a new car, and because of these tariffs, the price of a car goes up 25%. What does that mean for your ability as a consumer to withstand further price hikes 1-2 years down the line? I would say ultimately what this means is that if you're a producer like GM, Ford, Stellantis, etc., that means your pricing power is greatly diminished because of this. So if anything, it seems like it's more inflation in the short term and possibly even less in the longer term.
Okay. So where do you think the Fed is here? Is there a role for the Fed here to try to play a little bit of a counterballast here?
The Fed's supposed to look through these events.
Okay.
It seems like even outside of this tariff event, it seems like inflation is picking up no matter what. Food and energy seems to be going up. The ISM surveys, their prices components, they're picking up materially. So I don't think it's time to cut rates. It seems like growth is weakening. I think you got to just hold firm here.
So to sum your wonderful piece on what the fancy people are doing into a real GDP number with the trade dynamics, which is, I'm going to suggest, a complete mystery, are you sub 2% GDP visibly forward?
We're at 1.3% on the quarter. We think second quarter will probably be soft as well. But Q3, Q4, once there's greater clarity regarding the tax package, we think growth will pick up materially.
This is critical. When growth picks up materially, does it pick up? I can't pronounce it. I don't have a degree. Materially, did I get close, John? Thank you. When growth picks up after 4th of July, is that because of policy out of the White House?
We think so. Don't forget, one of the reasons for this recent sell-off in stocks is because of policy uncertainty. It's not only just tariffs, but it's also about this tax package.
Can I ask a dumb question? Why can't they make the policy choices in March or April instead of waiting for July? I just don't get it.
Well, I mean, it's Washington dysfunction. Sadly, it's nothing new.
Exactly. All right, so talk to us about just the consumer in general. How do you think the consumer is going to play out this year? Again, I'm looking at your vacation. That data's starting to soften a little bit. That might be an indication of the consumer. How do you think about the overall consumer here?
Well, I think this is a moment of a breather, basically. We've had robust consumption for years now, overwhelmingly driven by a select pocket of consumers, which are sensitive to stocks. Now that stocks are down, they're pairing consumption. The lower income consumer is very clearly stressed. You can see this in the delinquency data for auto loans, credit cards, and even to a lesser extent for mortgages. It's hard to see how you can have a healthy consumer when delinquencies have picked up to the extent that they have. For auto loans and credit cards, they're at their highest level since 2011.
In the time we got left, you are with Nico, of course, Sumitomo Bank of Japan. Is the strong yen for real? We're hearing any number of people say, finally, this trend is in place. Do you people agree the reflation experiment has been successful?
For now, it seems to be that case. The unions in Japan are asking for hefty wage raises. It seems like their domestic economy is heating up, and as a result, we think this is durable in the short term.
Troy, thank you so much. Troy Ludko with us with Nico today. Brilliant piece on what the fancy people are doing. And Paul, I'm just looking at random headlines here across NHBN, and it's just simple. JetBlue rises 3.2% first quarter forecast. Southwest Air extends gains up as much as 7.2% as well. Companies, my big theory, companies adjust. They say, here are the facts. It's changed. We're going to adjust.
Dick's Sporting gives downbeat outlook, even as sales beat. So they had a good quarter. But again, here's another consumer-facing company like the airlines. Dick's Sporting Goods, a retailer here, giving cautious sales outlook.
Nobody likes to see this, but, as a Red Sox fan, it's a joy to watch Garrett Cole pitch.
Yeah.
I mean, it's poetry.
Yeah.
And for him to be injured and to face surgery, it's a dark day for baseball.
It is. I mean, the Yankees, their starting rotation's been decimated here. So, but almost like the guy pitches in the postseason last year, and then you go the entire offseason, and it takes till spring training to figure out you got a problem. Well, I don't get how the timing works. I never do. Plus, it just goes to the whole baseball injury thing. You get hockey players getting teeth knocked out, and they come in the next period and finish up the game. These guys, sprain a hammy walking down the first base.
Oh, listen to you.
It's so
John,
frustrating.
It's because Lisa's not here.
Exactly.
When Lisa's here, it's a kindler,
unleashing.
Baseball players are soft is the thing.
When Lisa's here, it's a kindler, gentler Paul.
Exactly.
We'll have to see. Futures lift up 25. Dow futures up 153. A little bit of constructive move in the VIX, 27.19. On YouTube, thrilled with the growth. Thank you for subscribing to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round the clock. Right now, Dow futures up 146, S&P futures up 24, and the NASDAQ futures after yesterday's sell-off right now up 105 points. Some of the individual shares on the move. Coal's plunging. It was down 17%, forecasting comparable sales for the full year of -4% to -6%. The shares of Delta plunging. The carrier cutting its profit outlook for this quarter roughly in half after yesterday's sell-off of 15%. Tesla leading the rebound of the Magnificent Seven stocks this morning. It is most active right now, up 2.3%. And we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. On the equity markets, what we're trying to do is not give you punditry, but give you people grounded in the mathematics, the finance, the investment of what growing cash flows do to the market, given the trauma that we're in right now. I think Paul articulated it really well there moments ago. Cameron Dawson is a regular, brilliant, particularly more so on a morning like this. She's with New Edge. Well, Cameron, I just took the log linear SPX back to what I call the Guadalcanal low of 1942. We were extended, but really not all that much based off history. We were out like one standard deviation. We've had a correction. Is that all this is?
We do think that this is perfectly normal and something that we should be getting used to through the course of the year. When you came into this year with valuations so high, sentiment so stretched to the upside, positioning very, very long, very bullish, it just meant that there was a lot that was needed to drive this market much higher, but there wasn't a lot that was needed to cause a normal kind of correction. Corrections in the 7 to 10% variety happen even without recessions, even without periods of weaker growth. Volatility is a feature of being an equity market investor. And really the challenge or the opportunity is what you do with that volatility as it typically runs its course. So this is an opportunity, we think, to continuously upgrade the quality of portfolios, buy names that are the classic throwing the babies out with the bathwater with people indiscriminately selling. But it also comes with the message of when it comes to volatility, get used to it this year.
So what are you suggesting investors do here, Cameron? I mean, is there kind of a flight to safety here in terms of better balance sheets, better cash flows, more predictable, get out of some of the high-flying names that seem to be bearing the brunt, whether they be technology or Mag 7? How are you suggesting clients kind of react here?
Certainly. We think that there's a really big distinction that needs to be made between defensive and quality. Flight to safety, if it's just defensiveness, you see what's called episodic volatility higher. You're certainly seeing it in trading over recent days with things like utilities and staples doing much better. But that doesn't tend to last when you get the rebound. What we're looking for is names that have the high quality factor. So back to Tom's mention of things like cash flow, as well as really strong balance sheets, that they might have some cyclicality in their businesses. They're not outright defensive, but when they get sold on days like yesterday, that's an opportunity to step in.
So do you buy something that's down 15% or do you buy something down 48%?
Yeah, well, we would typically avoid the names that would be down 48% in this kind of environment, simply because if you are a high beta name, it likely means that you trade at a very high valuation. What we find is that those high flying names that capture the hopes and dreams during bull markets tend to have more volatility to the downside. So if you think from a portfolio standpoint, all they do is add volatility. They don't necessarily add extra return.
So John Tucker wants to know, does he load the boat on NVIDIA this morning?
Well, certainly there's quality within a name like NVIDIA, and the correction that we are experiencing certainly takes some of the air out of valuations. The big question we have for some of these high-flying Mag 7 names is, what does the market do with a second derivative slowdown? We know the pace of earnings growth is slowing down, and so it should not be lost on people that the peak in relative performance of things like technology, as well as things like NVIDIA, forget, happened in the summer of last year. What was that peak? That was also the peak of NVIDIA's earnings growth rate. So we think that's why we're seeing this kind of volatility.
I mean, Cam brings a bar to a complete halt when she talks about a second derivative slowdown.
No fun
Get
whatsoever.
one more in here with Cam Dawson.
Hey, Cameron, the technical's also looking a little dicey here. We note that the S&P 500 index is below its 200-day moving average. How do you think about that kind of stuff?
Yeah, we're looking for signs of the market getting washed out. The classic, are we there yet? And so that's where we look at things like the 20-day lows. That's a measure of seeing how many names within the index are spiking to new lows. What's interesting is that fewer names hit new lows yesterday than they did last week. So that shows you that maybe we're not at this peak panic kind of flush. We're also looking at the put-call ratio, how much investors are paying for downside protection versus upside optionality. That hasn't quite flushed yet.
Right.
So because we went into this with fading momentum, we think get used to, again, this chop and volatility before an ultimate low is reached.
Cam is the only one that reads the back half of Barron's every Saturday
exactly.
morning. The only one. Cam Dawson, too short a visit. Thank you on this important equity day. Ms. Dawson with New Edge Wealth. Futures lift up 28. The VIX 27.15. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. Outside of the stock market, there is other news. Top U.S. and Ukrainian officials began talks in Saudi Arabia about the path to a possible peace deal with Moscow, hours after Russia fought off the largest drone attack on its territory in the 3-year war. Ahead of the talks with the Ukrainian delegation, Secretary of State Marco Rubio said he was seeking to hear what concessions Ukraine was willing to make to secure a deal with Russia. Members of Ukrainian President Zelensky's top team are meeting with U.S. officials in the Saudi Arabian city, Jeddah. Ukraine is hoping they can get the Trump administration back on its side after last month's row at the White House. House Speaker Mike Johnson says he is confident that a continuing resolution will pass today that will fund the government until the end of the fiscal year and avoid a government shutdown at the end of this week. The vote is expected to be tight. House Republicans can only afford to lose one vote with their slim majority, but Johnson says it will pass.
No one wants to shut the government down, and we are governing, doing the responsible thing as Republicans.
Meanwhile, House Democrats say they will not support the CR. Minority Leader Hakeem Jeffries.
The House Republican so-called spending bill does nothing to protect Social Security, Medicare, and Medicaid. Quite the opposite.
Former Philippine President Rodrigo Duterte has been arrested in connection with an international criminal court case alleging crimes against humanity were committed during his anti-drug crackdowns. President Ferdinand Marcos' office said in a statement, Duterte was arrested today at the Manila airport and police took him into custody on orders of the International Criminal Court. The ICC had issued a warrant for Duterte's arrest over his campaign against illegal drugs that left thousands of people dead. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks. So tournaments begin today. Everybody has, Duke has like 4 buys. I mean, they've been so good, but it's the beginning of the year. Do you have a sense of what happens in those tournaments? Or is it wicked unpredictable,
It can be wicked
like March Madness?
It can be wicked unpredictable. For example, in the ACC tournament last year, NC State went along and won it, and then they went to the Final Four last year, and NC State was a very middling kind of team.
Do you have an NC State this year?
I don't know. You never know. You never know. But Duke looks, just unstoppable. But you never know. In the Big East tournament, St. John's looks great, but how about UConn?
Can I ask a dumb question? How many, it's unfair to you, but how many tournaments are there if everybody's merged into the Big
That's
Ten?
right. There's a lot fewer than
There's
there
fewer
used to be.
tournaments
Yeah,
than
there's
there
no
used to be.
Pac-12 tournament anymore.
Yeah.
Well, there is, but it's much smaller. So, but it seems like all the really good teams are in the SEC and the Big 12 and things like that.
Tracy Alloway and Joe Weisenthal are going to be with us. They're doing this thing in Washington.
I know. I'm thinking about hopping on the train.
It's a soiree, as they say.
Yep.
First time in the Capitol. They're doing macroeconomics. You come listen. It's 7 p.m.
Yep.
I think it's tomorrow.
Yep.
Well, I think, are they making an appearance today?
Yeah,
Did we
get
talk
Tracy,
to
I
their
think.
people? They're up next?
Wow.
Joe
Alloway.
Joe hasn't been up this early.
No, I think it might just be Tracy. I'm not sure if Joe's making it.
He may have
to
come
see how that
directly
goes.
from a light sweet crude rehearsal.
Yeah.
They're in Washington tomorrow. We'll talk to Odd Lots here. They're doing great. They have a wonderful interview with Eugene Fama and David Booth that they just did on Odd Lots. They're two of my heroes. David Booth, kind enough to give Barry Ritholtz a blurb for his new book as well. Mr. Booth is iconic at Dimensional Funds. Futures up 24. More data checks today. This is Bloomberg.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. More data checks today. Futures up 27, Dow futures up 164. Nice lift to the market, but I'm not going to call it an oomph. It's just a nice recovery off of the carnage yesterday. 27.23 on the BitDog, 70-some thousand, and then it's rallied here this morning like an 81,000.
Yep. Yeah, so we're seeing a little bit of a risk on here, Tom, with the equity futures kind of bouncing here. We'll see when the market's open if they can hold these futures.
In the old days, if you couldn't play the Edgemere in Washington, you know, like Dave Matthews was there and you couldn't get in on a Tuesday night, you'd play the Miracle Theater, which is just totally cool, like old, authentic theater in Washington, D.C. Tomorrow night, we thought Light Sweet Crude was going to play on their tour, but they do better. Odd Lots will be there. Tracy Alloway joins us now. It's too early in the morning right now for Joe Weiss. I get that. And you got a transportation and FCC angle in your soiree. First of all, you're serving drinks.
Actually, I don't think there's alcohol. There is popcorn. So anyone who buys tickets gets popcorn. I promise there will be something to eat and drink.
Bring your own beverage. Tell me about Andrew Ferguson, Blair Levin, Colin Grable. What are you going to do here, given the huge ferment in Washington right now?
Yeah, we heard Washington is a little bit busy at the moment, so we thought we'd go down and see what's happening. Now, we are hosting a live show. Doors open at 7 p.m. at the Miracle Theater. Our headliner is Andrew Ferguson, the new FTC chair for the Trump administration. Lots to talk about there. I think people are still trying to get a read on what his actual approach to antitrust is. We know under Lena Khan that there was this hipster antitrust idea where you would have a broader interpretation of the consumer welfare standard. Lots of people are curious to see whether Ferguson holds a similar view. We also have Blair Levin, the ex-FCC chief. He's really interesting because he did a lot of telecoms work during the telecoms bubble. So we're obviously going to ask him lots of questions about AI. We are finally doing our Jones Act episode. This has been a running joke on the podcast. We always tangentially talk about the Jones Act.
What is the Jones Act?
It is the old act that basically says cargo moving between ports or on inland waterways in the U.S. has to be carried by U.S. vessels.
Okay.
We don't have that many U.S. vessels.
Right.
So sometimes this is a problem.
Like getting natural gas to the East Coast.
Yeah, exactly. And Tom, especially for you, Joe will be singing a couple songs.
Oh, look at that.
He's got the road cases out. It's amazing.
Yep. Okay.
He does. I had to convince him yesterday that he should do music there because he didn't want to carry his guitar on the Amtrak.
Oh, please.
He could have borrowed mine. I got fancy cases.
Yeah, he's a musician. That's what they do. I see him carrying them on the subway. These guys and gals with these big oboes or big basses are carrying.
No, after the miracle, Joe's going to be down in the Washington D.C. subway trying to pay for the trip back.
So Andrew Ferguson, Federal Trade Commission. I think the market expected when the Trump administration, the M&A gates to be wide open. I'm not sure I'm feeling that right now.
Yeah, market kind of revising some of its pro-business opinions of the Trump administration. Again, we're not quite clear whether that extends completely to the FTC, but there is some overlap on the big tech platforms. You know, we saw the Democrats go after big tech. Andrew Ferguson has mentioned them a couple times. The Trump administration certainly doesn't like some speech restrictions on those platforms, so we'll see.
I got 40 seconds. What an honor. Eugene Fama, who I talked to the day of Milton Friedman's death. Eugene Fama of Chicago. What did you learn from Professor Fama?
Oh, well, that was a big interview. I always wanted to interview him. We spoke to him and David Booth, his longtime collaborator. Yeah. They have a new documentary out, which is really good if you haven't seen it. Basically about the birth of modern finance.
Very cool.
It's very cool. And it goes all the way back to the 1970s. All the people that were working at the University of Chicago or came out of the university and how they basically founded all these concepts that we take for granted nowadays.
Tomorrow night, you're going to need more than popcorn. You got a DoorDash Ben's Chili Bowl.
Okay.
Like 300, 300 hot dogs.
I'll put it in Joe's rider.
Yeah, it's close. It's close to the miracle to work out. Tracy Alloway and Joe Weisenthal tomorrow in Washington. An important discussion in the ferment of our Washington. Patty Loveless from a few years back.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, Jen Tucker in for Lisa Mateo today. A bounce to the market off the carnage yesterday and into Friday. Up 30 points right now on SPX. Dow futures up 178. Little tepid an hour ago, and it's picked up a little bit here in the last half hour. The VIX, I don't have a 26 print yet, but I'm at 27.13 on the barometer of risk. The Sweeney yield is turned. It was lower earlier, gloom, and now up 3 basis points. Paul, 3.91% in the 2-year yield.
Yep, that's, again, we're still below that 4% level, which kind of gets your attention here. And Tom, I'll call out Bitcoin for you, another kind of risk-on, risk-off asset, up about 3% here, trading just below $82,000 per token.
And probably waiting for news from Washington. There's been a dearth of it, but we've got a team glued to what the White House is doing and, of course, at Congress as well. Laura Davison leading our coverage down in Washington this morning. We say good morning to all of you on your commute across the nation. Good morning, 99.1 FM in Washington. Great to talk to Tracy Alloway there. There's soiree in Washington. Tomorrow, the Miracle Theater. Look for that. Smart conversation. Joe Weisenthal. Singing. Speaking of singing, with a Bloomberg Business Flash from the Interactive Broker Studios, John Tucker.
Right now, some recovery, a little bounce. Dow futures right now up 167 points. S&P E-minus 27 points higher. The NASDAQ futures right now up 112 points right now. Weakening retail sales outlook. Kohl's falling 14% pre-market, saying comparable sales this year are going to drop as much as 6%. Analysts projected a decline of about 0.6% on average. Dick's Sporting Goods issuing a disappointing outlook for this fiscal year, even as it reported sales and profit that surpassed analysts' expectations. And then on to the airlines. Delta tumbling, the airline cutting its adjusted earnings per share guidance for the first quarter. American slipping after saying it have a larger first quarter loss than expected. It's grappling with weak leisure travel and also fallout from that fatal collision in Washington, D.C. Southwest is going to be charging passengers for some checked luggage. They're ending the free bag policy.
Really? Wow.
There's a Henny Youngman joke in there. Donald Trump is going to meet with top business executives later today. Investors watching ready signals on tariff policy shifts. Some may question their timing, but Lowe's, in the midst of the biggest expansion in its 65-year history, they're opening 3 hotels in the Orlando market tied to Comcast's new Epic Universe theme park. The hotels could cost a combined $1 billion to build. Right now, again, Dow futures up 168, and we have crude oil. By the way, I think it was 288 at the Wawa this morning.
Nice.
Brent is up 87, 70.15. NYMEX crude up 82 right now, 66.85 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Lee Klaskow is scheduled to be with us here in a bit. He is expert on trucking in America. First, out where the truckers drive with Nationwide. Kathleen Bishjancic joins us this morning. Kathy, can you predict a recession? Is there any literature that shows you can go, we're in a recession?
Good morning, Tom. Well, there's a confluence of data that you watch. Incoming economic data, financial market cues, obviously. The equity market's a leading indicator, as is the yield curve, right? We look at the shape of the curve, the 10-year versus, say, the 3-month T-bill rate. Although we know that let us down a few years ago. The curve was quite inverted, and there wasn't a recession. It's one of the few times that I can recall that not playing out. So, one has to be careful. You look at all the data, all the facts. Right. I think right now what people are trying to grapple with and understand is that the Trump administration's really ambitious policy changes, what you're getting is anti-growth or drag on growth first, right? Tariffs, shrinking the government payrolls and spending, and then the pro-growth supply side enhancing measures come later, and particularly with tax cuts. So that's what we're seeing.
Where's your number right now on Q1 into Q2 on real GDP?
So first quarter is looking soft. We're below 1%. It could potentially even be negative. But we have to keep this in perspective. We had really extreme cold weather conditions that suppressed consumer spending. We had snow down in New Orleans a month or so ago. That's highly unusual. and then we had consumers and businesses pulling forward spending, fearful of tariffs, right, and price increases. So imports surged, and we saw a blowout in the trade balance. Arithmetically, that detracts from growth. But what we expect is that to settle down, and you get the swing back in the second quarter, but still softish. I mean, we came into the year thinking we'd see moderate growth. You can't the 3% growth we saw the several last years was unsustainably high.
Right. Paul, Columbus, Ohio, the home of Nationwide. The low is 39, and the high today is 70.
Oh, there you go.
That's a temperature swing.
The kids at the Ohio State University will be out and about, I'm sure. So, Kathy, talk to us about the consumer here. Obviously, the consumer's roughly 70% of the U.S. economy. And just this morning, Kathy, we've seen a couple of airlines give weaker than expected forecasts. We've seen a couple of retailers, Kohl's and Dick's, give weaker than expected forecasts. Are we starting to see the consumer already reflect some of this uncertainty and pull back?
I think we are, and you've seen that in the confidence surveys, right? Confidence or sentiment. They're concerned. They're reading the headlines. They're hearing that tariffs mean higher prices and getting concerned and pulling back a little bit. I also think underneath the surface, the labor market is softening a bit, right? It is. We're seeing people working for economic reasons rise, part-time workers for economic reasons. You're also seeing that if you are laid off or looking for a job, it's much harder to get hired now. So I think all of that does get the consumer to be a bit cautious. But the big but, the employment data we got on Friday showed good income support for consumer spending. So we have to see how this plays out. We're not yet in that recession camp, but risks are rising.
Kathy, just short of visit. Thank you so much. Kathleen Boshansik, and the important call there is a near 1-ish% real GDP right now. I'm going to call that a little light compared to what else we're seeing. Goldman Sachs published it last night, 1.7%. On YouTube, we say good morning, and we say good morning to Kuala Lumpur.
Nice.
That's west of LA.
Yeah, I think
Daniel Paris is there. His wonderful book, The Ownership Dividend, is for Global Wall Street. Paul, it's your favorite book.
Sure.
Daniel Paris just saying, shut up. We need higher dividends.
Yeah, I'm going to see Tim Cook down at Duke in a couple of weeks. I'll get in his ear about that. That's for sure.
Good morning on the Pacific Rim. We say good evening to Daniel Paris and all. This guy is frankly who Doug Ford should talk to in Ontario.
Yep.
He is expert on trucks. Paul, why don't you bring in our esteemed guest?
Absolutely. But there's all this talk about trade tariffs and the impact on growth and the uncertainty being injected into the economy. One of the areas where you're likely to see it initially will be in just the supply chain. I'm thinking about the ships coming over from Asia. I'm thinking about the railroads, the trucks, the air freight. What are those folks saying? Well, we've got somebody who's an expert in all that kind of stuff. Lee Klaskow, Senior Transport Analyst for Bloomberg Intelligence, joins us here in our Bloomberg Interactive Brokers studio. Lee, what are you hearing from some of your transportation companies as they think about how this economy may unfold for the remainder of the year?
It's really about uncertainty, unfortunately. I mean, after the election, I think the animal spirits were woken up. People thought that the economy was going to be humming along, lower taxes, less regulations. Obviously, that's good for the economy, good for freight. Fast forward to today, it's tariffs, 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 tariffs on, tariffs off,
right.
And people don't know how to plan. And that's really difficult. And we're not even talking about, like your last guest mentioned, the inflationary impact on the economy and the consumer really appears to be buckling, which really is not good for freight demand. And it's kind of giving us some concern about the outlook, because in the beginning of the year, we were pretty optimistic that truckload rates could increase by mid-single digits.
You're expert at this. We're not. Paul and I are clueless. Tucker's even worse. Okay, our idea of far west is the border of Pennsylvania and New Jersey.
Right.
Let's go to I-42, North Carolina, Goldsboro to Kinston to New Bern, and then down on south from there. There are these manufacturing corridors. In your world, trucks makes them go. What do the tariffs mean to the I-42 manufacturing corridor in North Carolina?
Well, interesting enough, there is a long secular trend of bringing more manufacturing back to the United States. And that's obviously a good thing, but it takes time. So just because tariffs go on doesn't mean there's going to be a light switch and manufacturing is going to start, and that's going to just increase the demand for trucking. So what you're going to have really is not so much the industrial sector. The industrial sector is going to be impacted because of lack of demand, and we're seeing that in flatbed rates. So flatbed rates are usually tied to the industrial economy, and they've been pretty weak recently.
So that's what I was going to go to, because in your world, probably the shortest duration stuff is trucking rates, right?
Yeah.
As opposed to long-term freight type negotiations. So in that spot market, are you seeing that yet? Are you seeing kind of a...
So spot rates are up, excluding fuel surcharges year over year by 2 or 3%. So yay!
Yeah.
But they've been coming down recently, and that has to do with some seasonal weakness, but it's also I think has to do with what's going on in the overall economy.
So I'm out near Altoona, Pennsylvania, where there's that big
horseshoe. Oh, that's awesome.
Horseshoe. It's great.
Been there.
And there's 2 trucks, and I'm going to get sandwiched. Are those trucks profitable now?
It depends who's running them. So if it's an owner operator that got into the business during the pandemic when rates were $5 or $6 a mile, those people aren't making money because they bought a very expensive truck, and now rates are $2 a mile, and that is obviously impacts your operating costs. A lot of those kind of truckers have been on life support in part because of the stimulus that was available to them from the government during the pandemic, and the savings that they were able to create during those boom times. And so we're seeing that capacity slowly leave the market. The Knights of the world and the J.B. Hunts of the world, yes, they're making money.
What are the maritime shippers, the global, shippers that you talk to? Are they expecting that these tariffs are going to be on on for a long period of time, and in fact will impact global shipping?
I was at a major Trans-Pacific conference last week. It's TPM. It's held every year in Long Beach, and I got to speak to a lot of shippers, and really they don't know.
Wow.
And
No one knows.
That's the problem. No one knows, because in the morning there's a tariff, and then in the afternoon there's no tariff.
If you're joining us across the nation in your morning commute, Lee Klaskow with us. He's absolutely definitive for Bloomberg Intelligence and all this infrastructure stuff led by trucking. I think it was, I'm going to say Prudential or Beige. Or both. I can't remember. It would publish, and I would just look at it and just stop, and you'd read every word of Klaskow. This is a few years ago, folks. What would you say to Doug Ford of Toronto, Ontario, the leader of Ontario? He holds the electrical switch for, I think, 3 states. Do they have power when you look? Forget about Carney and the election and all that. When you look at the provinces, what are they called? The states, the provinces? The provinces of Canada. Do they have a lot of sway right now?
We're learning so much this morning.
Yes.
In relation to
President Trump and tariffs.
That's way above my pay grade. I have no idea about that. I mean, obviously, if you're willing to charge a lot more for electricity, it's going to annoy a lot of your voters. So I think they do have some power.
Warren Buffett owns a railroad.
He does.
And his railroad is really predicated upon that trade from Canada through the U.S. down into Mexico. What are we hearing from that company? That's Burlington Northern Santa Fe?
Burlington Northern Santa Fe, they are more exposed to the Trans-Pacific trade. Yep. So they're big with stuff coming into the Port of LA and Long Beach.
Okay.
Bringing that stuff across the country. Also, they're obviously big in coal and ag. The rails have been doing okay. We've seen some volume growth of low single digits, which is good. The railroads, whether it's BN or the other class ones, they have pricing power still, so that's good. The one that's most exposed to the tariff noise is really Canadian Pacific Kansas City.
That's the one. Thank you.
They have a network that spans Canada into Mexico. It's an incredible network. They have a lot of growth opportunities relative to their peers, but that's really going to depend on tariffs. And I personally think that tariffs will be more transitory. I think I said that about inflation a couple of years ago, but yeah. So don't quote me on that. But it just feels like they're not going to be here forever. It's more of a negotiating tactic that is just create noise and havoc within the supply chain.
So Canadian National, with that wonderful acquisition down the Mississippi River, it's a big T, folks. It's across Canada, and it's down the Mississippi River. How are they affected by tariffs? And for you, is it not? I don't want to do buy, hold, sell. But is there an opportunity there?
Well, whether it's CP or CN, they are exposed to cross-border business. I would say roughly 30% to 40% of their business is cross-border. So, it has a big impact on where trade goes. Obviously, if Canada is importing less Jack Daniels and we're importing less maple syrup, then that's going to impact freight flows. The thing that concerns me the most from my coverage is the forest products. Those tariffs on forest products are really going to impact the cost of housing. And if houses are more expensive, less people are going to be able to afford them. That means they're going to be building less. That means there's going to be less freight. So this is really, obviously, I know you guys know this, but tariffs are taxes. And somebody has to pay for it, and eventually it's the consumer. And that's going to eat up on what they spend.
So for John Tucker, a sheet of plywood at Home Depot is going to cost more.
Probably.
See, there you go.
CDX?
I don't know.
I only use CDX.
If I pick up a hammer, people run. That's what I do.
Do you want to do trucking terms? Bob, I have all these questions. Reefer, bobtail, deadhead.
Yeah.
All the trucking terms.
Reefer is a refrigerated truck. So that will haul produce or maybe even pharmaceuticals and sometimes even electronics. It doesn't have to be cold. It just needs to be a certain temperature. So, so that's reefer. It's also, I guess you can.
Well, we know.
Yeah. And then and deadhead, that's a good segue. Reefer to deadhead.
When an empty truck, I guess, right?
Yeah. Yes. The deadhead is how the distance that a truck travels without freight.
And then a bobtail is.
Are you done?
No, we could go on forever. Bobtail is without a trailer, just the cab itself.
Okay.
There you go.
Thank you.
That's the most important part of the segment.
That'll
Thank
be on
you.
the quiz.
Thanks so much. Finally, we
Thank
get
you.
it. With our news and Alabama getaway, here's Michael Barr.
Thank you very much, Tom, Paul, John. Outside of the stock market, of course, there is other news. On Capitol Hill, the House could vote as soon as today on a GOP bill to avoid a partial government shutdown Friday, though at least one Republican, Kentucky's Thomas Massey, says he'll vote no. House Democratic leaders say they also won't support it, saying it does nothing to protect Social Security, Medicare, and Medicaid. Wendy Schiller, director of the Alfred Taubman Center for American Politics and Policy at Brown University, spoke to Bloomberg.
Well, it seems of late, the last couple of years since 2019, Republicans have not been so in love with shutdowns. And the other thing is that they understand that if you given the cuts that have already happened and the American voter response has not been sort of, one of great outcry. But if you shut the government down and then people remember why they need the federal government, it makes it much harder to continue with these DOGE cuts and, really reduce the federal workforce.
Wendy Schiller with Brown University. High-stakes talks between senior delegations from Ukraine and the U.S. on how to end Kyiv's 3-year war with Russia have opened in Saudi Arabia. The meeting today came hours after Russian air defenses shot down 337 Ukrainian drones over 10 regions in Russia during the night. 2 people were killed. Most of the world has dirty air, with just 17% of global cities meeting WHO air pollution guidelines. That's according to a report from the air quality monitoring database IQ Air. It found that India is home to the greatest number of polluted cities, and Los Angeles ranked as the most polluted city in the U.S. Air quality science manager Christy Chester Schroeder.
It's incredibly important that we do what we can to ensure that global citizens have access to real-time air quality data, not only to protect their health, but also because air pollution that is generated in one location does not stay there. And so we can all be impacted by air pollution.
Studies estimate air pollution kills 9 million people worldwide a year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Michael Barr, thank you so much. Futures pull back a little bit, up 20-something, up 25 now, up 14 as well. Thank you for the huge response to John Tucker taking over the show moments ago. Anchor it, trucking terms. Anchor it is apply brakes for an emergency stop.
Oh, okay. I like it. I mean, you got a whole litany of trucking terms here, glossary.
JIT is just in time. I knew that.
Yep.
Just a manufacturing system.
So all this is from the American Trucking Association, John.
Landing gear is retractable legs which support the front of a semi-trailer.
All right.
Pedal run, truck route with frequent delivery stops.
And bobtail, I didn't know this, they're harder to brake. When a truck's just bombing down the road without the big truck.
Well, it just has fewer wheels, fewer brakes, basically.
Yeah, well, you'd know that because you drive a Hummer. I mean, I would expect it. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. It was for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Green on the screen after yesterday's sell-off. Dow futures up 118. S&P E-mini futures up 17. The NASDAQ futures right now 68 points higher. That's up about 0.4%. I'll start off with the data we got this morning. Small business optimism sliding to a 4-month low. This is measured by the NFIB. A gauge of uncertainty neared a record high. Business owners growing uneasy about tariffs. Retailers, Paul, you mentioned Kohl's. That's plunging in early trading. The retailers' turnaround struggling to gain traction there. Comparable sales this year, they say, are going to drop as much as 6%. Kohl's, the latest retailer to disappoint. Softness is spanned from Walmart to Abercrombie and Fitch. Then you have Delta Airlines cutting its profit expectations for the first quarter. They're blaming weakening travel demand, also citing economic volatility and concerns over flight safety. And Tesla, the most actively traded pre-market after yesterday's 15% slide. Right
coming
now,
back. What do you got?
It's up 1% pre-market. Yeah. By the way, since we did this yesterday, so here's the update. Jeff Bezos is catching up a little with Elon Musk in terms of the world's richest human being. So Elon's worth $300 billion. Right. Jeff moving up, he's $216. Yesterday alone, Elon lost $29 billion, one day lost. Since the start of the year to date, Musk is down $131 billion.
I'll editorialize. Buy a pediatric wing somewhere. I'll let them pick where it is. We say good morning to John Tucker. Thank you so much. We're having a good day here. After you look at the number of days here, and the VIX elevated out to 27. If somebody in the room orders a Tang and Tito's, that's pretty good. I mean, you know, instead of a mimosa, there's such a Tang and Tito's. We said good morning to Tito's down in Texas. Tesla, we got to talk to quickly here. It's eroding, Paul. It was a 222 to like a 232, up $10. Yep. And it's now up $1.50.
No, we'll have to
it's
see how
just
this
giving way.
Yeah, there's real concerns about the fundamentals there, just in terms of the number of units across the board. So we'll stay on top of that.
We wanted to nail the math of the moment. You do that with Stephanie Roth. She's with Wolfe right now. And let's go to partial differentials here. The core equation is Y equals C plus I plus G plus NX. You told me off the mic that the consumer matters. Tell me about the dynamics of the consumer into a sub 2% GDP call.
So if we think about the drivers of upside growth for the past couple of years, it's been on consumption, partially driven by the wealth effect. Now that's going the other way to some extent. And even though it's not all eroded, I mean, it's been trillions of dollars, there still is that sentiment. And then on top of that, we're starting to get hit by tariffs. We basically had double the China trade war in the last 2 months than from the 2018 trade war, and that's kind of going unnoticed to some extent. And then that doesn't factor Canada, Mexico. It doesn't factor reciprocal tariffs, which are likely coming next month. So this tariff thing is a big deal, likely to knock off 50 basis points off GDP this year.
Yeah, we just saw this morning. Some of the companies reporting earnings today, the consumer-facing companies like the sporting goods stores, Dick's, Kohl's, a big department store, the airlines, all reporting weaker than expected outlook forecast. Is that already reflecting some of the uncertainty of what we're seeing in the marketplace? Yeah,
I think it's certainly starting to. The data so far shouldn't have a material impact, but looking ahead, that's definitely the case. Uncertainty is high. It's a problem for consumer-facing companies, and it's also a problem on the capital spending side of the economy. How do you invest if you don't know the tariff rates and you don't know what the fate of the economy is going to be in the next 12 months?
I want to emphasize when Stephanie Roth, the heavyweight, comes in here and she says we knock 0.5 percentage point off on tariffs, I'm using a lower number out of Yale University, but the answer is you take 0.5, folks, and divide it by whatever your guesstimate was before. So 0.5 divided by 2.5 this is Stan Fisher 101, is a 20% markdown in the growth rate. That's a lot of angst. Can you bring that over to the labor economy?
Sure.
Are you willing to give me a 5% unemployment rate?
No, I'm not willing to give you that. I think what we'll see is we will see a bit of an uptick in the unemployment rate. I don't think we're getting to 5%. I think at that point the Fed's going to certainly be stepping in. And then the Doge layoffs are not that big.
Right.
They add a couple of tenths at most. So it should be more just a stall speed in terms of hiring, which is why we're not forecasting a recession.
So, and that kind of goes to the administration is making the points these days when they're challenged on some of these economic uncertainties that are in the marketplace. Near-term pain for some longer-term gain. Are you whether it's extension of the tax cuts or just some other economic policies that'll drive growth in the back half of 2025? Are you reflecting that in any of your GDP work?
The problem is the short-term pain doesn't necessarily make obvious long-term gains in the sense that the tariff policies, a lot of the tariffs that have been put in place are not going to bring forward manufacturing into the U.S. We don't really have the capacity nor the desire or ability to produce low-cost goods. So putting tariffs on that, putting tariffs on ag, it doesn't really produce long-term gain, and we still feel the near-term pain. And then when we're talking about the tax cuts, it's not really tax cuts. We're just extending current policy with maybe a little bit of tax cuts on tips and a couple other things, but it's net a growth negative.
Stephanie Roth with us on your morning commute with Wolfe Research across the nation. On YouTube, thank you for subscribing to Bloomberg Podcast. TRC, first-time caller out on YouTube. We're up to 42 listeners. It's amazing. TRC says good morning to Stephanie Roth.
So, Stephanie, how do you think the Federal Reserve is kind of monitoring these developments here as it relates to potential slowing economic growth, potential for higher inflation? How do you think they're looking at that?
Well, certainly this week's CPI print is probably not going to be that important for them because it doesn't factor in that. They're going to be thinking forward ahead at this point. So the things they're going to be looking at are going to be unemployment rate. Is that starting to rise? Are they getting uncomfortable with that? The pace of hiring. And then inflation expectations is going to be another key one. And what's different this time versus the last trade war in 2018 is inflation expectations long-term are driven mostly by your recent experience with inflation. In 2018, recent experience with inflation was we had none. This time, people are going to be a lot more concerned about inflation because they just experienced it.
How do you measure inflation expectations and the anchoring of said expectations? Do you do it with Michigan or do you look at it another way?
I mean, the Fed does look at Michigan. The survey's not great, but they'll be looking at it.
Agreed.
They'll be looking at New York Fed, and then market-based, inflation expectations will be important too. So it'll be a whole host of inflation expectations measures. I do imagine UMich will still get attention, even though perhaps it's not the best reflection. New York Fed is probably a better one.
So where do we go from here in terms of thinking about this economy here? Are you forecasting that a recession is possible here? What are your odds of that?
Odds of recession right now is about 35%.
Okay.
So certainly not the base case. I think the market is just pricing in the more elevated chance of recession. I don't think it's necessarily gonna price in a full recession. But right now, based on our models, we're looking at the market pricing in a recession about 24%. I think it probably has to get closer to our 35% before the sell-off can be stabilized.
But it's all hinged on policy. I mean, your calls, which are brilliant, can they all be amended, adjusted by one comment from the White House? That's sort of where we are, aren't we?
To some extent, and that's why we had to make such big changes to our forecast in the first place, because this is all policy related. The thing is, what we're hearing and the actions that we've seen so far are that they really believe in the tariffs. They're going big on them. Yes. Unlikely for them to reverse in a big way. And they don't seem to have much concern about the market or near-term pain. I mean, Trump has said this over and over again over the past couple of weeks.
So talk to us about the inflation risk. Well, I don't know. Like, when I'm going back and forth with Eric right now saying, I want to get an economist on who really believes and it can articulate the Trump policy, because that is the story is, near-term pain for some longer-term gain. And that's great. I just want to see how it's going to play out here.
Brilliantly said. And Steph, the heart of the matter is we've run out of capacity to do growthiness because of our debt and deficit. That's the fundamental difference from 8 years ago, right?
Yeah, and we're not able to do tax cuts from
degrees of freedom. That's a fancy
exactly. Trump was able to do massive tax cuts the last time. So the setup is very different. They're just trying to extend them, which just cost $4 trillion to do just to prevent a large tax increase on the consumer.
Remember the exam where you had degrees of freedom and chi-squared on the same exam?
No, thank you.
You did an all-nighter and finished with vodka, right? Like Tito's.
Yeah,
Stephanie,
sure.
that was brilliant. Thank you so much. Don't be a stranger. Stephanie Roth driving the market lower here with Wolfe Research right now. We thank her for that. Seriously, folks, futures have eroded. We're up 25. We're now up single digits, up 7. The VIX turns around 27.77. And I don't mean to pick on Tesla, but it's like front and center, and Tucker's thinking of buying one. And I'm looking here at 223 on Tesla. It's almost a round trip from 232 down to 222. We're not there yet, but Tesla up $1 right now. The Sweeney yield, it is 3.89%, sort of leveling in yields here, but the equity market deteriorates. Futures up 5. On your commute, we say good morning on Apple CarPlay, Android Auto. Good morning on YouTube. Subscribe to Bloomberg Podcast. For Terry Weissman and Macquarie in Melbourne and Sydney, good evening on the Pacific Rim. From New York City, from beautiful New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Some of the earlier gains we saw for the futures evaporating right now. The Dow futures up 44 points, a rise of 0.1%. S&P E-mini futures right now up 7 points, and the NASDAQ futures 36 points higher. Call it a parade of horribles. American Airlines Delta also issuing a warning shot about the economy. Consumer spending pulling back sharply as economic worries ratchet up, they say. American also roughly doubling its loss expectation for the first quarter, hours after Delta slashed its profit guidance in half. Most active right now, pre-market shares of Tesla up 1%. Parenthetically, Donald Trump says he's going to buy a Tesla to help Elon Musk. NVIDIA, second most actively traded stock pre-market right now. That's pretty much unchanged. And no more leaky roof. Manchester United planning to build a new 100,000 seat stadium next to
like University of Michigan.
Yeah. Well, it's
huge.
It's huge,
but they're not good anymore.
It's old and leaky.
And I think I haven't talked to Pharaoh yet, but I think they bulldozed the old place. Which is like un-American.
Well, it's still there. They're going to build it right next to the existing.
They are building right next to it. Still
kind of like a Yankee
Foster,
Stadium situation.
Same people that build our franchise in London.
Yeah.
Picked again.
Is that right?
Yes.
I did not know
Architects of the moment.
Okay, awesome.
Are you done, or do you want to talk?
No, that's pretty much it.
Okay, John Tucker, thank you so much. Lisa Mateo, is she with us tomorrow?
No.
Oh,
wait, I'm
more
back?
Tucker.
Yes. They didn't tell me that yet. It's not in my contract.
We say good morning to you, and futures deteriorate very seriously here. We're up 25 on the bounce, and we're going to get some red on the screen here in a moment. This is a joy. Alex Morris is out, and I remember this, folks, like when Cornell led the way on something called biomolecular engineering. And people are like, are you kidding me? Like, it's 20 syllables.
Who picks that?
And it became one of the most prestigious double majors in engineering back when, I was wandering through that area. Cornell Chemical and Biomolecular Engineering is just really definitive. He's with FM Investments in Washington. You have a phenomenal paragraph on fighting inflation. You can't fight inflation. The rhetoric doesn't matter. You got to get on board inflation assets, right?
That's it. I mean, inflation is the type of thing when they say we're fighting, it's too late, right? Most of the places that you rush to either created the inflation in the first place. Like if we look at 21 to today, most folks who are pressing and said, well, let's buy gold. Gold collapsed. Commodities were creating the inflation. They had a rough ride. Equities had a pretty much of a wipeout in 2022. So the only way to get on board is do the one thing that a lot of folks find very unpopular today, but it's to go to the government. Go and buy tips. And I know tips are a maligned asset class. Every few years, people try them out and say they didn't work. What doesn't work in longer dated tips is duration. And what I think most folks need to rush to now is something you hadn't looked at in a long time, ultra short tips. The idea of how do I get that CPI?
Can you define tips for our audience?
Sure. TIPS are Treasury inflation protected securities. It's a Treasury bond, just like when we talk about the 10-year, but the government agrees to give you the rate of inflation every month in an increase to principal and an increase to your coupon. It's an actual guarantee from the government. And they work really well. The downside is when you buy a 30-year TIP, it has 30 years of duration in it. So
what was the total return last year? Just to give us a
last year was about the total.
Short tips.
Short tips were about 4.5% to 5%. So you're getting about the T-bill rate, which is what you'd expect from a less than 1 year product. And if you went backwards to say what happened between the start of inflation in 21 and now, you'd find that for a short while, for about 18 months, T-bills did nothing, where you lost 14% of your purchasing power to inflation. Whereas the ultra-short tips market gave you about 10% of that. And then a few months later, when the final CPI resets came in, they gave you the rest of it back, which is kind of what I think when folks said, I want to sit in cash, they wanted to buy was cash that would buy them the same goods and services tomorrow. What they got was cash that lost 14%.
I think he's competing with a triple leveraged all cash fund.
Exactly.
That's right, yeah.
Alex, when you see the S&P down, 8-9% from its highs, when you got the NASDAQ down 12-13% from its highs, for equity investors, what do you tell folks about these equity markets?
I mean, we've been calling for a correction for some time, not necessarily we, but the market has, and it finally got what it wanted. Okay. And I think a lot of this is folks need to be aware of the rhetoric factor, right? Rhetoric can talk them up, it can talk them down. You have an administration now who is kind of after the fact saying, well, maybe we're going to have a recession. I don't see any reason why there needs to be one. We don't see the need for that sort of vim and vigor of the whole thing. But I do think folks need to accept that this is what happens, particularly with the big tech stocks that were, probably 6 months ago, everyone would tell you they're slightly overvalued. Well, here they come.
What do you see in free cash flow? I mean, everybody's telling us the same story, that you have to find free cash flow of quality. How do you define that? How do you find free cash flow?
Well, it used to be, could I pass through the rate of inflation to you, right? And was it reliable in the product stream? Now I think it's really going to be, can I survive the uncertainty of what's happening in the market? And it's kind of strange that we went from a fairly certain trajectory 6 months ago to near hour by hour changes to what's happening. So companies that are, were out of favor 6 months ago are in favor now. The ones, though, that have reliable business models, have age on them, and have proven over time to be adaptive, I think are where you're going to find that marker. But you're also going to have to look past some short-term moves. Like someone like Apple, even though they've had a rough few days, people aren't giving up their iPhones, right? We're not going back to Morse code and telegrams. So those businesses will continue to do well.
So you're looking at this as a correction. I mean, Paul, what do we say? Are we in a correction stage? I think we are.
Not for the NASDAQ we are, but not necessarily for the
SPX, we're not quite there yet.
Not quite there yet.
Okay.
But I think the key is we're probably in a mental correction, right?
Yeah.
Like we
know that.
It's just we've been talked into this, which is the problem. We're just going to
No, we're in a mental correction here because of Seamless. All of our kids are ordering Seamless 3 times a day, so we're having a mental breakdown here, but continue.
Yeah. So do we look to buy the names we like because now they're X% cheaper, or do we expect more pain and we can maybe even get them cheaper? Are we in that mode yet?
Well, I think that they're probably going to get a little cheaper, but I wouldn't let that stop you from a regular rebalance cycle.
Okay, we're going to have to run here, but Paul, I got to ask, for those of you on radio, you're not seeing the glory here. I went with a pink tinge bow tie today.
Okay.
Alex is just killing me. Alex Morris is just blowing it out.
Yep.
With the two-tone, the pink and the blue here. So
it's a solid effort. He did it for you.
I could see you in a bow tie.
No,
we could do it right now.
Yes, exactly.
Alex Morris, thank you so much. FM Investments in Washington. Please visit again. I like this idea. We don't talk enough about tips and short-term paper, and that's a good thing to touch upon here in the market. Here's what you need to know: the market just went red. Futures -3. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. And outside of the stock market, there is other news. There are signs this morning a government shutdown may be averted on Friday. Maybe. The ultra-conservative House Freedom Caucus is throwing its backing behind a stopgap funding package. Bloomberg's Amy Morris has details from Washington.
The Republican spending bill is designed to keep government agencies open through September 30th. Representative Don Beyer, a Democrat from Virginia, talked about the options and the worries that the president will unilaterally delay or cancel appropriations, called impoundment.
Unless there are
meaningful guardrails to keep Trump from impounding it, we should vote no in the Democrats in the Senate and hopefully some Republicans in the Senate.
Virginia Democratic Representative Don Beyer on Bloomberg's balance of power. House Republicans could pass this on their own if they get enough votes from their own caucus, but even after it passes the House, it still has to get through the Senate. In Washington, Amy Morris, Bloomberg Radio.
The NTSB will lead the investigation into the deadly crash of a medical transport helicopter in rural Mississippi. The helicopter went down north of Jackson as it was returning to Columbus from a patient transport. Luann Woodward is the University of Mississippi Medical Center.
We did receive confirmation that all 3 people on the helicopter, the pilot as well as 2 healthcare crew members, were deceased. There were no survivors.
Luann Woodward with the University of Mississippi Medical Center. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Paul Sweeney nailing it earlier. When there's a conference, people talk, and they got to get out front. Their PR people are saying we can't keep it secret.
Yep.
United Air says it's seeing weakness in travel demand. Describe for our audience, Paul, what a conference is.
Yeah, I mean, it's just it's a time where you can get all your institutional clients in one room, usually sponsored by a sell side.
Stocks,
People that buy the stocks, the buy side, all your
funds.
big shareholders, potential shareholders. They're coming to, in this case, it's J.P. Morgan is hosting
so it's like
this
the
conference.
CEO speak?
CEO and CFO, and it's, this is conference season right now. The earnings are done, and they can free to talk. But before you get up there and talk about your business, you better make sure that what you're going to say about your future earnings is accurate. So if you said, hey, my earnings are going to be up 10%.
It's not a sales job. It's like, this is our update.
You got to fully disclose where your business is. And if your business has changed, you got to tell people.
Quickly, is the breakfast better than the catered breakfast we have here at Surveillance?
They're pretty solid. It is solid eats there.
It's a solid breakfast at the J.P. Morgan concert. Probably Lisa Mateo wouldn't like it. Futures at -2.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance, your sports report. How about that? Futures -3. We should be talking the markets with Jess Benton. We can't. Texas A&M Rockets up the AP poll to number 14.
Wow,
and at
that's
number 1, out moments ago, is Duke.
Yeah, of course.
Taking out Houston here.
Exactly right. So
well.
they are, I think, the best team in the country. We'll see how it plays out during the tournament. But there's a lot of good teams. It's going to be a great tournament. There's so many good teams this year.
A&M, we'll see what the seeds are. I think
the
A&M
SEC is like become the powerhouse of college
Texas
basketball.
Tech at number 9. What is that about?
I know. I don't support that.
Jess Benton with us right now. We support a conversation. Quickly in the market, you wrote about the falling knife.
Yeah.
What's the falling knife for our listeners and viewers?
Well, especially because when you're thinking about what's happening with the 200-day moving average that got broke yesterday for the first time for the S&P 500 since November 2023. So trying to catch that when you have a lot of people doubting. Stu Kaiser, for instance, over at Citigroup, saying that he's not he's saying he's not necessarily recommending clients buy the dip on that because he still doesn't feel like we've seen enough of the washout when it comes to the tech and the momentum trade right now.
He was in episode 4 of Industry. I thought that was great.
I like Stu Kaiser because the trading desk at Citi sees everything. They talk to everybody.
They do. And so sharp when it comes to options. So obviously we're seeing heightened when we're thinking about volatility and implied volatility over the next few trading sessions, but especially tomorrow. Obviously, CPI will be coming out tomorrow morning. So when you're looking at that options implied move right now, around 1.3% swing in either direction for the S&P 500, that would be the highest potential implied move for the S&P in about at least 2 years.
Jess, is anybody on the street saying buy? Go out
Tom
there and
Lee.
buy. Oh, well, Tom
Of course, dear
yes.
buddy Tom Lee.
Okay.
So we know Tom is a well-known stock bull. I would say, though, that I did talk to Jeremy Siegel, who we also know is a well-known stock bull on Wall Street. But what was interesting was he was calling for a little bit more further pain. So he was thinking about a 10% drawdown for the S&P 500. Of course, not calling for a bear market. He was arguing to buy the dips on here, but he just felt like coming into this year, some of the exuberance we've seen with the AI trade, he wouldn't be surprised if there was a little bit more downside here for the S&P.
So what are you hearing from the street here? Because as you mentioned, the technicals don't look great. I guess, are we trading just on fear here? Is that what it, or just, or is this part of a healthy pullback? Like what I have heard from some people is they don't sense panic out there.
No, anytime I've been talking to people on trading desks, as well as in the derivative space, it's been more orderly. And part of it is when you see the VIX getting closer near 30, it's going to be more expensive for people on the options side to put protection on. So if you saw something like that, that could potentially serve as a floor, as well as 5,500 on the S&P 500. There are not a ton of puts below that. So that could also serve as a potential floor there too. And I would say that if you're looking at earnings growth expectations for 2026, haven't budged, still at 14%, even though they've come in marginally for this year, around close to 10% right now, and it was around 13% at the start of the year. So when we're talking so much about the economic coming in, you haven't seen that happen yet for earnings growth, but we will have a month from today is when JP Morgan kicks off earnings season on April 11th.
Futures -4. What are you writing about this morning? Give us a heads up here.
So I'm watching about, well, your favorite, the collar trade for JP Morgan. I won't get into too much detail with that, but I'm also getting into, obviously, the profit growth expectations that I was just mentioning, and then also more on the technicals with what we're watching, where if you're looking more shorter term, the 10-day moving average and the 20-day moving average, you haven't seen extreme, usually you have to see below 10% of stocks in the S&P 500 trading below those in the shorter term to kind of give an all clear. Haven't seen that just yet.
I got 8 more questions as well. KG just emailed in on the basketball. We'll have to see. Jess Manton, thanks so much. Go Texas A&M. Greatly appreciated this morning. Bloomberg surveillance this morning with futures flat. It's brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Paul, I mean, there we are. We're up 25. I'm flat right now.
Yeah, exactly right. So, I mean, we'll see how these things go in the cash market here, but it feels like nobody seems to be wanting to step out in front of this thing right now. But, you know, again, there's going to be a floor somewhere. And the question is, do we have more pain to go as we think about this economy?
Team pulled an all-nighter to give you the conversations you need. They said, play the Killers.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and John Tucker in for Lisa Mateo. Coming up, Just Do Something. We speak to someone who has to choose and decide on the tariff war. The governor of Connecticut will join us in a moment. Bloomberg Surveillance this morning brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4%? March of 2025 trade your prediction with IBKR Forecast Trader. The yes was recently at 60%. Buy yes or buy no and earn $1 if you're right. Go to ibkr.com/forecast forecast. Paul, futures deteriorate.
Yeah, that was quick, Tom. We had futures trying to show a little bit of strength here, a little bit of a rebound after yesterday's sell-off. Kind of rolling over a little bit here. We're just kind of flattish on the futures here. So again, growth is the story time. We heard from the airlines, some of the retailers, some weaker than expected outlooks is what we heard this morning.
From the Interactive Broker Studios, the Bloomberg Business Forecast, here's John Tucker.
All right, let me power through this. The Dow futures right now down 22. S&P E-mini futures 3 points lower after yesterday's sell-off, and with the NASDAQ 100 in correction. NASDAQ futures this morning, they are down 7. Citigroup strategists downgrading their view on U.S. stocks to neutral from overweight. Retail pain, Paul, as you mentioned, Kohl's falling over 15%. Comp sales this year are going to drop as much as 6%. Analysts projected a decline of only about 0.5% on average. And then the airlines, American Airlines, slipping, saying it's going to have a larger first quarter loss than expected. It's grappling with weak leisure travel and fallout from a fatal collision involving one of its planes in Washington. As far as crude oil, NYMEX crude right now up 1.1%. 66.77 a barrel. A Tesla, most active right now, up 0.1% after yesterday's 15% sell-off. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Many talk, few have to act, and one of them is the governor of Connecticut. Ned Lamont joins us right now in our studios this morning. You're wounded. For those of you on radio, he's got the sling going in that. You're on a trade mission to India. How is President Trump helping Connecticut with your trade relations with India?
India was nervous as heck about President Trump. That said, we went to Eastern India, which is by far the most innovative and entrepreneurial part. We did a trade mission there, met with 40 or 50 companies, some of which are thinking about getting a foothold in the United States. I had to spell Connecticut for them, but now they know.
Well, you have to spell Connecticut for me as well. Governor Lamont Blumenthal out as well on this yesterday. You take electricity from Canada. If Doug Ford of Ontario or Quebec Hydro, if they pull the plug, what's it mean for Bridgeport?
We have some very high electric prices throughout New England, including Connecticut, and we bring down a lot of hydro from Canada. So you put 10% on there, that would add about $75 million. You put 20% on there, that'd be $150 million in additional fees paid for by our ratepayers. Not a great idea.
So, Governor, as you've probably seen here in the financial markets, which Tom and I deal with every day, a lot of uncertainty in the marketplace as it relates to economic policy of this new administration. We're seeing that in lower stock prices and weaker dollar. How do you see it from Connecticut? How did you and your constituency look at this current environment?
I come out of the business world. The business world hates uncertainty. Yep. You know, when I took over Connecticut, we were going from boom to bust, a bust, and raising taxes. And we've had 6 straight balanced budgets, trying to give people a little certainty. Our unemployment rate is way down and job growth is up. But it's just the opposite in Washington, D.C. right now. All that uncertainty, starting with tariffs, looking at deficits. A lot of businesses said, I think I'm going to hold off right now before I make that investment. That's not good.
So in Connecticut, what are the chief issues that you guys are dealing with from an economic perspective these days?
Look, we're looking at our 7th and 8th balanced budget, comma, unless they cut Medicaid by $1 billion. You cut Medicaid by $1 billion, our budget is turned upside down, and that's true of 49 other states.
What are you hearing from the federal government about some of those big ticket items?
I don't think they know right now. I was down there. I met with folks. The secretaries have just come into office. They're coming up with their modeling, but everything runs through the White House.
For those of you across the nation in your commute today, a Democrat, the governor of Connecticut is with us, Ned Lamont, as he tiptoes through all this different policy changes we're seeing. I'm going to cut to the chase. You got a vote of confidence from the people. You got 49% of the vote and won in 2018. I'm going to call it barely. You improved dramatically in 2022 with 57% of the vote. What do you say, really the polarity of the nation on right and left, but what do you say to the Democratic Party as they address from a left liberal point the reality of a centrist Lamont and others as well?
A centrist Lamont probably is going to disagree with the Trump administration on a majority of things, but start with areas where we can find some agreement, we can work together. For me, that starts with energy, the high price of electricity. You know, the possibility that we could bring in natural gas or expand nuclear in our region would be transformative. A place where I've been meeting with the secretaries down in Washington, something we can get done together.
Right. Well, let me you know, we're at a piece of chalk in our hand at Harvard years ago. Ned Lamont, did the Republicans win the election? Did Trump win? Or did the Democrats lose the election because they were too far left?
I think Trump won. He won because it was a change election. I look around the world, nobody wanted more of the same. And I think a little bit Kamala got stuck with the Biden legacy, couldn't differentiate herself from there. And believe me, Donald Trump represented change.
When you think about the Democratic Party today, a lot of folks are saying, where's the leadership? Because it seems like President Trump and his administration are taking all the oxygen out of the room. Where is the Democratic response? Where's the Democratic policy? Where's the Democratic leadership? Who do you think is the leader? Does the Democratic Party have a leader these days?
Well, when we're not in power, you tend to have a lot of different leaders. I'd start with the governors. The governors are not making everything a battle about Donald Trump, but when it comes to Medicaid, we're going to hit hard. We're going to work with Republican governors to say, you know, uninsuring these poor people is just going to drive a wedge into your hospitals as well, make a difference. Find areas of specific interest and focus on that, you know, rather than just make everything about Trump.
Congestion pricing. We've got a congestion pricing correspondent right here. What is Connecticut?
He's trying to get me in trouble.
Yes. New Jersey has a particular view of congestion pricing against it. How does the folks in Connecticut
I just think you have to pay your bills. And New York City's got to pay their bills. You got a pretty antiquated subway system.
No.
Does anybody have a better idea of how to pay for things? It's so easy to say no. And right now there are a lot of people saying no.
Right.
So I'm a little sympathetic to Kathy Hochul on this.
You represent an advantaged America with the heritage of J.P. Morgan and all that you've done in your life. How does America find the center again? We are, whatever anybody's politics on this show, we can all admit it's a fractured America. How do we find the center back to your family and Estes Kefauver years ago and others? How do we get back to the center, Governor Lamont?
I think we found in Connecticut, Republicans and Democrats find places we can agree. Let's say we did the biggest tax cut ever last year, but it was middle-class people and beyond. It was not for rich people. That was an area where Republicans and Democrats could get together, $500 million tax cut. What we're doing in terms of making sure that we educate people for the jobs that are out there right now, there's a disconnect. I'm finding pretty good balance between Republicans and Democrats there. Look, there's a certain incentive to say no. That's what the nature of the opposition party is. I don't think that's good for Democrats at the national level, and I don't think that's good for Republicans at our state level.
Foreign policy, it's another area that is front and center, for better or worse, for the United States, both in the Middle East and in the Ukraine. Let's just start with Ukraine. There seems to be, I guess, a willingness to find some solution over there. And then it's a question of how you get there, and President Trump has a certain focus here. How would you approach what's happening in Ukraine, trying to find some type of peace there?
Not the way Donald Trump is doing it. Okay. Look, he wrote The Art of the Deal. You go in, you negotiate from a position of strength. Instead, Pete Hegseth just pulled the rug out from under Zelensky, put in place a whole list of concessions, a sense that we're not going to be there to back them. I think that's a terrible way to do it, and our allies around the world are watching how we treat Ukraine. I heard that when I was in India as well. I'm glad they're sitting down. I think they're negotiating. I think that's long overdue, but negotiate from a position of strength.
When I look, Governor Lamont, at Connecticut, and I think there's so many stereotypes out there, and folks, you can come up with your own stereotype. It probably starts with a Hinckley picnic boat or a Graham Banks yacht, but the reality is Connecticut's got an incredible polarity, including 16, 17% foreign-born migrants. So, you know, whatever those numbers are. Last time we talked, you said you're managing it. It's not the crisis of New York State and what Mayor Adams is facing, but give us an update on how Connecticut is tackling this polarizing issue.
Connecticut is a diverse state. We represent the diversity of the United States of America. When I go to India, I have to say, look, the stereotype of Connecticut is a bunch of Fairfield County guys in these boats you're talking about is not the reality. Our biggest percentage of international students are Indian-born students, and that we welcome that. I think that's a great strength for our state. And I think it's a great strength for our country, and I think we're getting away from that.
You come from business. You have a business background. President Trump today is addressing the Business Roundtable. What do you think the message should be from Trump to the business leaders and from the business leaders to President Trump?
I think from the business leaders to President Trump, you're seeing the incredible anxiety and uncertainty reflected in a collapsing stock market and rising unemployment rates. Look, I agree with you in terms of wanting to do big things, but you don't have to do them overnight with a chainsaw. Give us a direction of where you want to go, and we can invest accordingly. I hope the president listens to that.
I'm fascinated with a Supreme Court decision the other day with Amy Coney Barrett going over. There seems to be a primal scream of the judiciary solving legislative problems. You're part of that as an executive in Connecticut, but also almost like a legislature to Washington is a governor. Has the legislature just given up the ghost in Washington? I mean, does Congress even part of the debate anymore?
I'm sort of glad to see the judiciary standing up to some of the intrusions from the Trump administration. That said, they haven't passed a darn thing down in Congress in the last 2 months.
Exactly. That's how people feel.
Maybe the judiciary is stepping in there, but I think the judiciary right now is the guardrails protecting our democracy.
One of the great themes here, and it's a theme of your life, is we've expanded our federal mandate away from states like Connecticut. I mean, there's a swing back here where we've said enough on entitlements. When you see the policy from your advisors, we're going to pull back from agriculture. We're going to pull back from Congress. We're going to pull back FAA and all the rest of it, the DOGE stuff and all the rest. It's a primal scream of a smaller Washington. Is that feasible?
Right now it's popular because it sounds like DOGE is getting rid of a bunch of bureaucrats who are, just leaning on their shovels. But every day in our state level, you're seeing how it's hitting people, starting with health care. I think that pushback's going to get louder and louder.
Ned Lamont with us, the governor of Connecticut. We continue our conversation. We welcome all of you. And today, Governor Lamont's people came in. They said, Tom, please do data checks here. We understand the market's blown up. Futures up 25, now -3. Again, the VIX comes out over 28. That's a key statistic, 28.05 on the VIX. Yields were lower. They're now higher. There's some real correlated churn to the tape right now. Oil 66.87 a barrel. The dollar weaker this morning. Yen churning, I'm going to call it. The euro well over a 109, showing some of the currency dynamics. Paul, with the governor of Connecticut.
Governor, you and the state of Connecticut, as you mentioned, have been able to balance your budget. We're coming up to some budget discussions down in Washington, D.C. What is your advice to folks in Congress about these upcoming negotiations and trying to balance the budget and trying to push that part of the policy through?
Governors are so frustrated with Washington. We all have to balance our budget. Down in Washington, it's an afterthought. I understand that deficits are not politically that charged an issue, but you got to do the right thing. You don't have to solve it overnight, but you got to directionally start showing that you're getting your budget under control. I don't see that happening in Washington.
Are you surprised there's not more political pressure to do that? Because I think the message I've taken is that unless people force Washington to do that, either to lower expenses, raise revenue, whatever they have to do, unless there's political pressure, there's really no incentive to do anything.
Look, here at Bloomberg, we care about that deeply. We know if you don't have an honestly balanced budget, bad things happen in the future. I've paid down our debt by over $10 billion. People don't care that much. They have real needs every day. How come you're not taking care of that?
So how do you think about that? I mean, is this how do you think, if you were to balance the U.S. budget, where would you go? Expenses, revenue, both? How would you think about it?
I don't think I'd have the biggest tax cut in history for the wealthiest folks. I think that sends the wrong signal, takes us in the wrong direction. I think I would be going after efficiency, not the way DOGE is doing, but in a serious way. And you can't disregard entitlements.
I got two questions left. They're both really, really important. And one with immense respect to your family, the heritage of the Lamont family on all of Wall Street. Is this a new Gilded Age? Have we skewed things so far over to billionaire mania that we're really reliving? I mean, Trump has this fixation over McKinley and tariffs. Are we reliving McKinley as a society?
I think we are a little bit. I think inflating the money supply and all the deficits have made the rich a lot richer, probably the richest they've been since 1929.
I got one final question. It's incredible. Paul emails in and says, it's just simple. Finally, Big East basketball is back. I mean, I'm looking at UConn St. John's. This could be exciting.
That's going to be a great Big East game. UConn is playing better and better. The men and the women are top flight.
The women are top flight. But in men's basketball, UConn's won 4 in a row. Are they saving it for St. John's here?
Hey, look, we're 2-time national champions.
Yeah.
We know what we're doing.
Okay. John
Great
Tucker,
coach.
would you like to? This is on congestion.
Do you know?
taxing?
No, this is more important. Do you know why they call it the Nutmeg State?
No.
It's based on a scam. The Yankee peddlers used to sell fake nutmeg to unsuspecting travelers in Connecticut. Do I have that right?
I rephrase that a little bit. We're a great trading state. We take advantage of our advantages.
Final question. I noticed finally after 400 years, we get new Amtrak trains. Everybody blames Connecticut for the worst wires. We fixed it. Forget about the tunnels. We fixed it New York to Washington. Give us an update on your unspeakable relationship with Amtrak to give us better, cheaper train service.
I will tell you, we're going to be able to speed up Amtrak dramatically over the next 5 years. We got significant resources from the Biden administration. We are a choke point. We got a lot of little towns, a lot of stops along the way, a lot of twists and turns around Mrs. O'Gillicuddy's home. Right. We're going to speed that up.
Is the president going to cut your submarine effort?
I don't think so. It's the strategic piece of our triad that's still undecipherable.
Folks, for those that don't know it, you take the train up and you're there and there's like a submarine over in a window. Explain to people what's going on. It's your submarine base in Connecticut. It's top secret. They don't even know if they leave or go because they leave underwater. But explain the commitment of Connecticut to our United States Navy.
Yeah, Electric Boat, part of General Dynamics, makes most of our submarines here and down in Virginia. It's the last piece of our triad that is still undetectable, so it's really important in terms of our strategic deterrence. If you think the Soviets are coming in from the North Sea, they're going to come right by New England. It's very important what we got there in the Groton, New London area.
Awesome. Governor, thank you for joining Bloomberg today. Greatly appreciate it. Mr. Lamont of the state of Connecticut. John, that was very good. You behaved yourself. I thought
reasonably. I didn't get in trouble.
You didn't get in trouble, but the Nutmeg State. Thank you. I did not.
For the Nutmeg State.
Honestly, I didn't know that.
My softball.
Governor Lamont.
Nice to see you, buddy. Thanks.
Good to see you. Take care. Governor Lamont's never coming back again. We'll have to see on that. Futures in -2. We're a greener. Very seriously, folks. Let me look at Tesla here. I can do that on the Bloomberg Professional Service. TSLA, the yellow key equity, and I could give it a DES screen here to look at it right now. And the answer is, besides 125,000 people working for Mr. Musk, we sort of given it back. I got a 223 on Tesla. That's down $9 from where it was 2-3 hours ago. We're right almost back to where we closed yesterday. But Paul, I'm sorry, it's a deteriorating tape. And a VIX over 28 is not, I'm sorry, a 28 VIX is not a 25 VIX.
No, and one of our guests was mentioning when you get a VIX at 30, that's one of the signs that suggest maybe you're approaching a bottom. When you get that kind of level of angst in the marketplace. We're not quite there yet. But you mentioned Tesla, Tom. Year to date, the stock's down 45%, and that's got people that are even the Tesla investors who are used to volatility in the shares. And volatility oftentimes emanating from Mr. Musk himself, upside and downside. I think that's getting their attention here.
Have you noticed on the Bloomberg Professional Service, greatest headline service in the world?
Oh, yeah.
Am I right that like in the last 30 hours, there's a dearth of headlines
from Washington.
Out of the White House?
Yeah, very good.
Is it like they've gone quiet?
Well, I think the market would appreciate that. Just a little bit of calm for a little bit of time to see if people can reset here a little bit. And see some names and get some sense of valuation.
Yeah, we'll have to see on that. Sean Donnan out with an important essay for Bloomberg here, from baseball bats to caskets. New Trump tariffs set to hit home.
Oh, boy.
It's good to know, to say the least. Sean, thank you for that. Red and green on the screen from New York. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Wealth management, capital markets, investment banking. Most active pre-market shares of Tesla right now after yesterday's 15% sell-off. It is up right now 0.8%. That is followed by NVIDIA, second most active in the pre-market, up just about 0.5%. Kohl's forecast comparable sales for the full year of -4% to -6%, worse than estimates. As a result, Kohl's shares, that's one of the standouts this morning, not for good reasons, down over 14%. And airlines highlighting a different environment. Delta slashing its profit forecast. They're citing weakening travel demand. American Air cutting its first quarter forecast. Dow futures, they are deteriorating right now, down 60 points. S&P E-mini futures 8 points lower. And the NASDAQ futures right now, they are down 34 points. NASDAQ 100, after yesterday's sell-off, it is in correction, down about 12% from its peak less than a month ago. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Can't emphasize enough what Mr. Tucker just said there, folks. This idea of deterioration in the tape. This is not drama, but nevertheless, the vector's in place. -9 on futures right now, and the VIX 28.0 at 7. I'm going to call it somewhat non-correlated here versus oil, actually up 66.80 on American oil. A timely conversation with someone, seen this a few times before, Margie Patel, on correction. Margie Patel, of course, with Allspring. Margie, you're going to tell me to find quality free cash flow. You're going to tell me to find dividend and dividend growth. Where is it?
Well, I think really with this kind of correction we've had, you really have to look more at the growthy oriented rather than so-called defensive, high dividend kind of stocks that a lot of people have said to be popular, simply because you've had such a big correction in many of the large cap growth stocks. They actually look rather reasonably priced, maybe even about the same price earnings ratio as the average stock in the marketplace.
So how do you, when you talk to your clients, is this a we don't want to be catching a falling knife scenario, or hey, we could be selective here on some names we like?
Well, the thing is, when the market has a lot of volatility, short-term volatility, senseless, it's not really related to the fundamentals. In fact, I think we ought to bring back the uptick rule, and that might mute some of the volatility that we see.
There you go.
But when you look at the economy itself, it's chugging along at a low rate. We may have a negative quarter, many people are thinking, but we actually had a negative quarter when the Fed began to raise short rates a couple of years ago. And after that quarter, we were off to the races again. So I think that after we get through this choppy uncertainty, we may have a better market for the rest of the year.
What is the character of this pullback? I mean, when you're talking Margie Patel and the uptick rule, we could stop the show and go for an hour and a half on dumbest piece of legislation ever. But Margie, what's the character of this pullback versus any other 14 vanilla corrections? Is it just all political?
Well, I think for this cycle, as opposed to, say, 07, 08, that you have many, many more short-term traders, and that's contributed to the extreme volatility that we see, short-term volatility that we've seen, rather than fundamentals. So I think that's really the issue. But as I said, when you look at the economy, it looks pretty good. The Fed is committed to not tightening up financial conditions. And this is actually kind of a weak period right before people pay taxes, the uncertainty about the budget. So I think we have a little bit to slosh through, and then the market will stabilize.
See how she's calming?
Sure.
She should come over for dinner tonight.
Yeah, exactly.
I mean,
Calm everybody down.
Vetville's portfolio's got hammered. Margie should come over and calm
Margie, a lot of folks in President Trump's economic team are acknowledging that some of his policies could result in some short-term pain, whether it's slowing growth or higher inflation. But longer term, and I think they define longer term as the back half of this year, there should be some gains, whether it's from extended tax cuts or maybe some other pro-growth initiatives. Are you buying into that? Is that short-term gain, longer-term gain? Is that something that makes sense?
Well, yes, I think so. I think the big risk with the change in administration would the temporary tax cuts expire, and then tax rates for corporations and individuals would jump up. And I think that would have been very, very negative for the stock market. So now we have a lot of uncertainty about, are tariffs good or tariffs bad, and how much can they cut from the government. I think it's pretty modest at the margin that they'll actually be able to cut. But any improvement in efficiency in the government is just what business does every day. So that's pretty good. Mainly, I think the tax cut is the number one issue that will benefit the economy and the market this year.
Margie Patel with us, and we will continue with Margie Patel of Allspring Global Investments in Boston. Good morning, 92.9 FM in Boston. Good morning across the nation and community. Thank you, Ned Lamont, for some real wisdom there from Connecticut, the Democrat from Connecticut, particularly on the hydropower, if you will, from Canada. We need to get the market open. We do it with Lisa Mateo. The short straw goes to John Tucker. John?
She'll be back soon, don't worry. There you have it, the opening bell at the New York Stock Exchange. Right out of the gate, the Dow Jones Industrial Average down 83 points. That's a decline of 0.2%. We're at 41,853 on the index. And the S&P 500, after yesterday's 2.7% decline right now, it is lower, 11 points lower. That is down about 0.2%, 5603 on the index. And the NASDAQ 100, after a plunge of 3.8% yesterday, NASDAQ 100 right now is down 22 points. The ads early going down about 0.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is the opening bell report. Paul and Tom.
John Tucker, thanks so much. Again, red on the screen, down -64. The VIX elevated above 28. Margie Patel's with us with Allspring, and we continue. Margie, do you own bonds still, or are you just going all dividend growth?
No, in my portfolio, I have actually I've raised it a little over the last month. It's about 16-17% of the portfolio, which is a bit higher than it's been for a while, simply because if you think this is going to be a so-so year for equities, I'm thinking 8 to maybe 10%. High yield bonds, say yielding 6.5%, looks like a pretty reasonable trade. It's just as good as a dividend income anyway.
There you go. What's the duration? You buying 40-year paper?
Well, the duration of the high yield market has shortened up a lot, and it's now about a little over 3 years. My duration is a bit longer, maybe 3 3/4 years.
That's really important.
It's shortened up quite a bit in the whole market.
I think a lot of people listening, Paul, they think a high yield is like, seriously, 8-year, 10-year, 12-year duration. They are 3.5 years. Wow.
That's what we've heard. Yep. Margie, so as we step back here, and if someone were to ask you, is this a healthy pullback in an otherwise decent equity market, or is this something more? What do you tell them?
I don't think it's anything more. Even last fall, when we had the market really just spike up to really incredible levels, I think most people felt the market was a little toppy, a little overpriced. So it was really set up perfectly for all the uncertainties and negative things that appeared in this part of the year. So you've had a big correction, and now NASDAQ is down, I think, about 10% year to date. Standard & Poor's about 5%. So that's not really bargain territory yet. Yeah, but considering that the Fed has basically said we'll have stability with likely cuts, that's really not a bad level to look at the market. The average PE is, I think, about 22, 24 times.
Margie, generous of you to be with us today. Thank you so much. From Boston with Allspring, Margie Patel. Paul, I'm looking at, I don't know where we're going to be in an hour. Paul and Alex are going to tell you. Is Alex still in Texas?
She's in Texas.
She's milking that for all she can.
Oh, she's got it. We have a ton of great interviews coming from Texas with Alex, so she's all over this energy
hydrocarbons.
business. Yep, absolutely. Oil and gas.
And Peter Orszag actually saying that, Lazar is saying that this is an important conference, to say the least. The VIX are 28.61. Am I on the 30 watch on the VIX? Dare I say I think I am.
I think you are, Tom. I mean, 28.64 for the VIX here. And again, some folks feel like, all right, we start to pay attention when this thing, when it breaks above 20, and then when it gets to 30, then it's got our attention.
I think folks actually want to know my honest answer, given the trauma out there. Dow -177. I think we're beholden to a set of headlines out of the White House, whatever your politics. And I think they know that at the White House.
And maybe
they're like, how do you craft a headline if I got a 28.69 VIX going the wrong way.
Yeah.
It's a really, I mean.
And President Trump is meeting with the Business Roundtable. Some of the leaders will be down there in Washington today, so I'm sure he'll hear some suggestions as they think about economic policy.
I mean, what's Jason Trenner doing down there with Strategas? He's probably sitting with the president right now, having a morning cigar.
Yep.
And they're, they're like saying, okay, Mr. President, what are you going to say to give confidence to Republicans and Democrats within the domestic market?
Exactly, because we've heard from just many of our guests the age-old adage, markets don't like uncertainty, and that's kind of what you have right here.
Did I do okay on our interview with Ned Lamont?
Oh, I think he's great.
I mean, I've only been to Stanford. Yeah. I mean, if you don't have a Hinckley, picnic boat, I mean, that's the way you roll.
He balances the budget.
It's a diversified state. That's the major message. Good morning to all the governors in those close combat states. The Dow, negative 187 from New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's 2.7% drop of the S&P 500 and the NASDAQ 100 3.8% plunge, right now we're mixed to little change in the major averages. The Dow, 146 points lower. That is down 0.4%. S&P 500 right now just turning red, down a point. The NASDAQ 100 up 70 points. That's a rise of 0.4%. You have 6 of the 11 major industry groups in the S&P 500 lower. Industrials, healthcare, the biggest drags. Energy, the best performing group right now. Among the individual shares on the move, in terms of the leaders, in terms of percentage points, NVIDIA, that is up 2.8%. Amazon.com up 1.5%. Tesla, after yesterday's 15% sell-off, today it's up just about 4%. Apple, one of the laggards right now, that is down 1.1%. Verizon Communications, that is a sell-off right now of 7.25%. Do treasuries real quick. The 2-year up a basis point, 390. Get the JOLTS job survey later today. Yeah. The 10-year is up 2 basis points. That is at 423. Mike Mickey says don't really pay attention to the JOLTS.
It's just it's off the state. Well,
so anyway.
John Tucker.
Thank you.
Thank you so much. Greatly appreciate that. On Tesla, the colored montage speaks. What does Dan Ives say?
Dan Ives is out on X here, Tom, and I quote.
Twitter.
Yes. And I quote, a pivotal moment for Musk and Tesla. Autonomous, FSD, new cheaper EV models all coming on the horizon to drive demand. But this Musk-Doge political firestorm needs to be contained for the Tesla brand. Investors need to see Musk lead Tesla at this key moment. The time has come, end quote.
He's 2 years late. I can't believe people are first now discussing the CEO of Tesla's political machinations now are affecting stocks. People have been complaining about this for 2 years.
But to see a bull, like a perma-bull on this name to come out and call it out, that's notable.
He may. The problem is he's a perma-bull, and that's why he's 46% late. Hey, thanks for the heads up. It's been cut in half. Really appreciate the timely insight.
Join us right now. Disappointed the Knicks didn't score 150 points last night. Barry Ritholtz, in celebration of how not to invest. I'm not going to go into the math, but this is a really important book because it's a massive type 2 construct. Page 309, Why Politics and Investing Don't Mix. You quote the American philosopher Kaylee Cox. You say, it is not the party in the White House that drives returns. It's market compounding over time. What do you do when politics takes over the markets?
Well, you know, we've seen this movie before. We saw it in 2016. And I don't care if you love Trump or hate Trump. The market went straight up during his administration. You could say the same thing about Barack Obama. That's about polar opposites as you're going to get, at least in terms of character and policy. Market continued powering higher during his administration. Look, it really takes something unusual for a president to completely derail an economy and a market. Not that we're not sort of flirting around the edges with this right now. This is very much an unforced error. And the market is saying, hey, we voted for tax cuts and deregulation. We didn't vote for chaos and mayhem. Some people would argue they weren't paying attention, but that's the takeaway.
Down negative 212, Paul.
So, Barry, again, the economic message coming out of this administration from the economics folks within the administration is short-term gain, a pain, maybe. Okay, we acknowledge that, for some longer-term pro-growth gain. Is that something that makes sense to you? And I think by longer term, they mean the back half of 2025, not out years.
Not exactly long term, but I don't know. You know, I stopped listening to quarterly conference calls because I believe the nonsense I hear from CEOs. So I decided I have to pull myself out of that morass. They came into office on a certain set of policy promises, and the market was incredibly enthusiastic on it. And I can't hear what they're saying because what they're doing is speaking so loudly. We are now back at levels that predated Election Day.
Right. Right now, reading the screen, a lift to the market here. The VIX under 28, 27.85. Barry Ritholtz with us. Now, I don't know, Ari, if you got the book cover here, How Not to Invest. Barry Ritholtz. And don't be intimidated by 500 pages. It's 380 pages of footnotes. It's only about 80 pages long as it goes. Everybody's saying Warren Buffett's a genius. Is Warren Buffett a genius for having $2 trillion in cash?
Look, Warren doesn't move to cash that often, but when he has, it certainly has been fortuitous. We saw it in the late 90s. We saw it in the ramp up to the financial crisis. And let me remind you, at least as of yesterday, we'll see where it trades today, all of the Magnificent Seven, but for Facebook, were negative year to date. And predating that, Warren very much reduced his Apple holdings.
Right.
I can't recall if we've ever seen a company lose $1 trillion in market cap.
Yeah.
But that's where we are in NVIDIA, to say nothing of Tesla cut in half.
Is he waiting for a VIX of 50 like December 08, like March of 2020?
My rule of thumb is anytime you're over 30, 35 in the VIX, you want to start thinking about picking up some stock, unless you're in a much more structural downturn. This does not feel to me like a recession, like a financial crisis. This is, we just really don't like these policies, and because they're going to impact corporate profits 10% or so, they're going to take 10% off of corporate profits. We were priced for perfection. This is not perfection.
What are some of the, to the extent that you got some phone calls today from your clients saying, hey, we think we'd like to start dipping our toe in here. I like some of these valuations here. Where would you go?
So that's a really interesting question because we're not seeing the signs of capitulation yet. We're not seeing the signs that this has bottomed. Now, by the way, I could walk out of the studio in 10 minutes and the market could find footing and say we've gone too far too fast. So it's a little bit of a fool's errand with that. What we like to tell people And the first quarter conference call we had with all our clients in January was, hey, back-to-back 25% plus years, up years in the market means that you should dramatically reduce your expectations, somewhere in the plus 5 to 6% range for 2024. But that could be as high as, plus 10, 12 or as low as minus 10, 12. So this isn't the sort of environment, and 8% off the highs isn't the sort of noise that you want to say, let's start buying here, let's start picking things out. You really want to see more of a dislocation if you're putting fresh cash to work.
30 seconds, the chapter. Ladies and gentlemen, the Beatles. Is Sir Paul coming to your book party?
Boy, I would love that. I would love to just get him into the studio and ask him how things going. The thing about that chapter is I love finding areas outside of finance to reveal to people that nobody has a clue what's going to happen in the future.
Sullivan in the headlines.
That's right. And the headlines were uniformly terrible. They can't sing. The harmonies are awful. You're not going to remember anything except the hair, and they'll probably be bald soon. I mean, you go back and you look at this. They age like Brie left on the dashboard in August parked at the beach. But just look at, people are now downgrading Tesla. Look at people now saying maybe you want to throttle back on NVIDIA down 30-something%.
You're fired up.
I just find this sort of environment a target-rich place to point out that nobody knows anything.
Smartest says I got to do a data check. If a basketball team scores 133 points in a game, is that basketball?
The move towards fast break and no defense kind of came and went. Just a little bit of a throwback to the run and gun era. To me, I want to see some interior defense, which the Knicks don't have. It's not just LeBron James penetrating. It was the whole team at will. But generally speaking, the Knicks have surprised over the past 2 years. We don't want to see Brunson out for very long. That injury is kind of concerning. But, they're on the move, and we're very pleased to see a better team this year than 2 years ago.
Next time you go for front row at the court, take Paul.
Yes, all right.
Please. He'll appreciate it. Don't take me. I could. Barry Ritholtz, thank you so much. Let me get up here one more time to flog this book. They spent 3 hours over this color blue to say, is this the right color for the cover? How not to invest. I can't say enough about the word not in that title. Red and green on the screen from New York, Bloomberg's surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Thank you for being with us this morning, particularly out on YouTube. I'm learning about it every single day. I feel ancient with YouTube, but thank you so much to Google and YouTube for all they've done on YouTube podcasts. And, out at Bloomberg Podcast, subscribe there. You pick up Joe Weisenthal, Tracy there in Washington tomorrow. To finish strong here in the hour, Sarah House, for too short a visit, was Wells Fargo as well. Sarah, when you publish this morning, are you publishing based on waiting for one or two headlines from the White House? Is that what this has really come down to?
So we've certainly seen a lot more uncertainty and volatility kind of injected into the forecast, but we're still trying to pay attention to the fundamentals. So what we're seeing in terms, for example, of the jobs market, income derived from there, what that means to spending. But yeah, the headlines have injected a lot more volatility and certainly made the forecasting process a lot more difficult here in recent months.
And Sarah, just looking at some of the headlines we're seeing coming out of corporate America, whether it be the airlines all cutting their forecasts, whether it be some weak numbers out of a Kohl's, who, again, weaker than expected sales forecast, Dick's Sporting Goods, it seems like the consumer is pulling back a little bit. I mean, is this something that gets your attention?
Yeah, I think so. So obviously we've seen the consumer be really the stalwart of growth over the past couple of years. But if you look at what's been happening with real income versus real spending, spending's been outpacing income for the better part of the past year. And so I think what we saw in January was maybe a bit of an exaggeration of that consumer pullback. But really, we're seeing, I think, the consumer becoming more stretched. And I think seeing that play out in some of the more recent earnings reports where activity is also potentially, I think, going to be more sensitive to some of the higher prices that we could see from tariffs, but having that be to the detriment of some service sectors.
And have you, at your shop, have you changed your economic outlook here? Because there is some concerns that some of this economic uncertainty, if nothing else, will slow economic growth. Are you factoring that in at all?
Yeah, we're in the process of that. We'll have a new forecast out tomorrow morning.
Oh, come on, Sarah. Sarah, no one's listening. Give us a front load on it. Come on.
Well, I think we've already been on the conservative side, thinking that we would see a big increase in tariffs, which would slow growth and also keep inflation sticky. But now we have this, I think, added challenge of some of the federal spending cuts that hit federal employment directly, indirectly from some of the contracting and nonprofits. And so I think there are additional headwinds that have cropped up that point to even more subdued growth than what we were previously looking at.
Can you model out, I don't care how long, a 5% unemployment rate?
So I think you really have to see more weakness coming out of the labor market than we expect. So I think even with some of these DOGE cuts, some of the spillover effects, given just the demographic backdrop of the United States, the population, I think you really need to see an outright downturn, an outright recession to get a 5% unemployment rate.
Sarah House, thank you. Too short a visit this morning. We'll do it again with Wells Fargo. Their senior economist is as well. Tesla was 222. It's a nice jump. It's up. They came back to where it was 3 hours ago. 231. I don't know, red and green in the screen, but it's tentative.
Yeah, that's
how I'd put it.
Yeah, and I think a lot of folks would say, just give me a calm day here with a little bit of stability in the marketplace so I can go back and revisit some of my names, some of my investments, some of my stop loss orders, all that type of stuff to reassess my portfolio.
Can I say in 24 plus years here, whatever it is, 30 years, I've never seen a market waiting for a headline from the White House like this.
Yeah, that's kind of what it seems like. The market's become accustomed to that because they have been, they could be taken together, certainly material for the economy.
It's a reason to stay with Bloomberg Radio today. I don't know what's going to happen, but Paul Sweeney and company, Alex Steele in Texas, they'll drive it forward and then on to Balance of Power with a huge Washington focus and Carol and Tim in the afternoon. The VIX 27.74. The gentleman from Nashville.
My first car, I tore it all to pieces. I learned the path to heaven is full of sinners and believers. Learned that happiness on earth ain't just for high achievers. I learned, I come to know there's life at home.